that chart is looking like, because there you go. This is the recovery that I'm talking about from that day's low point to now almost 66 points up around 0.3 odd %, and this is largely on account of the kind of amphi data that has come out. And let's try to pull up the Nifty Bank also, because that has also seen some recovery where the trade is concerned. There you go, up 0.23% and around 130 points up as we speak right now. But let's try to pull up the Nifty 50 heat map and see as to what counters have seen some recovery. There you go, Bajaj Finance and Bajaj Finserv both still losing ground right now on account of Bajaj Finance cutting its AUM guidance overall. Tata Motors is something that is down 1% as well. ONGC also down by about 1%. But now tides have turned, right? You have more greens on the chart than you are seeing reds right now. Interglobe Aviation up 2.7%, BEL up 2%, Bajaj Auto, Eternal, HDFC Life, Adani Ports, M&M, Tata Consumer, HCL Tech, Dr. Reddy's, as well as Jio Finance, Bharti Airtel and Shriram Finance, all seeing gains of about 1%. And that's probably something that's leading to this recovery in Nifty 50 that we're seeing. Let's try to pull up the sectoral heat map and see as to how sectors are doing right now. More greens here as well, because Nifty Defense, of course, still leading that pack, largely led by Garden Reach, up 2%. Nifty IT also up almost 1%. Nifty Auto also up 0.8 odd %. But something that's not doing well is your PSU banks, down by about 0.4 odd %. Your healthcare down 4.4% as well. And Nifty Media also seeing some amount of profit booking. Nifty Pharma, Nifty Realty also in the red, but very slightly. Let's try to pull up the mid cap 150 and the small cap 250, and of course also see the advanced decline ratio post that and see as to how that's looking like. The mid cap 150 almost in tandem with where the benchmarks are, up 0.2 odd %. However, the small cap 250 for the second day in a row is seeing a bit of pressure, down by about 0.3 odd %. Let's quickly pull up the advanced decline ratio. There you go, 1316 odd declines versus that of 1000 odd advances. That gap has narrowed here, but still in the favor of bears right now. Lastly, the BSE 500. A lot of stock-specific action yet again on the back of earnings, your news flow coming in. Vodafone Idea up 7%, ESAB up 10% as well. Polymedicure, Craftsman Auto, Graphite India is seeing recovery today after the kind of downtick we saw yesterday in trade. HLE Glasscoat, though, taking a beat, down about 13 odd %, and Aarti Drugs also down by about 8 odd %. We talked about the Bajaj Twins, Balaji Amines and Gujarat Ambuja Exports down by about 4% each. So this is with regards to some specific names that are under pressure. But Sharad, what's the market telling you right now?
Well, Mahima, there is a lot of volatility still. There is a recovery, but remember today is Nifty expiry as well. So whether these numbers stay put at the closing levels, that's something to look out for. And speaking of closing levels, November 7th in numbers you see 25,492. Now this is coming at a higher side, 25,574. We are expecting this number to be on the higher side. So we'll have 3 days of higher closings coming in. Nifty support range is small, but more importantly the Nifty resistance range, that I have kept a very narrow range, because I have kept an element of volatility also in the last 90 odd minutes if that can come in. Nifty Bank reclaiming its 58,000 mark, an important support and resistance levels, and much better chart positioning than Nifty. But European markets, let's have a look at them. There, that's also opened in green. Markets are in recovery mode, and as Mahima pointed out, small caps have again missed out the party for the last 2 trading sessions. October SIP record levels almost touching the 30,000 crore mark, and HDFC and ICICI Bank are holding up very nicely when it comes to recovery. That's why the Nifty Bank is also holding up. IT index strong buying for 2 sessions, profit booking in certain PSU banking names. But market is looking positive for the Trump's commentary on US-India trade, and global cues are also positive because of an expected reversal of US government shutdown as well. So a lot of moving factors, domestic as well as global, coming in the favor of the markets. And now joining us is Kush Bora, founder at kushbora.com. A very good afternoon to you, Kush, and a very strong recovery. Also, we saw, from the day's low in the midway, and October SIP data was also buoying the sentiments. Nifty Bank, right now, which chart setup looks good, and any positionings we can have?
Hey, hi, Shiv. First, a very good afternoon to you and to all the viewers. To answer that question in a very short way, Bank Nifty looks better. Now, just to drill it down, Nifty has, as you rightly pointed out, made higher high formations for the last 2 sessions, but equally important is to note that the highs of the day, yesterday and today so far, has been pinpoint at the 20-day moving average. So clearly suggesting that, the 20-day moving average has acted as a bit of a resistance. Yesterday, also in the morning show, we spoke that the 20-day moving average is something that you need to watch carefully. If the Nifty is able to cross above this and close above this, then the last couple of sessions, the last few sessions of downtick that we've seen could be less sinister and just a profit booking dip. But if it doesn't, then it might just continue to consolidate with a mild negative bias. So still a little cautious on the Nifty till the 20-day moving average is taken out. And we're not too far, 25,665, that's where the 20-day moving average is. So that's the view on Nifty. As far as Bank Nifty goes, like I said at the beginning, more constructive on Bank Nifty for sure. This one also has been consolidating, but above the 20-day moving average, hasn't really closed below it, regained the ground very quickly. I think if you want to create a long position, then Bank Nifty is still your index to go for a retest of higher levels at 58,600. And support zones come in at about 57,700, 57,600 zone. So yes, still prefer Bank Nifty over Nifty.
All right, so Nifty Bank will be preferred for a trade if you compare it with Nifty right now. But Kush, stock specific, what would be your picks?
Yeah, like I have been doing for a while. I'm still going with a mix of a long and a short.
Right.
On the long side, I've got GE Shipping. Very, very sharp moves on this one. We've discussed this one in the past. Had done well. Profit booking came about and the stock dipped 20-day moving average. Now there, the stock's taken support and rebounding. Again, the volumes today are actually more encouraging than the price setup. So yes, once again, GE Shipping for levels of 1140, 1170 with a stop loss at the 1080 mark. On the sell side, SBI Cards continues to slip lower. It has been flirting with a 20-day moving average, but not really able to reconquer it in a meaningful way. And today it's slipping on the back of fairly healthy volumes. So yes, on the downside, you could continue a short position on SBI Cards. 855, 845 are your targets. 875 is where you place that stop loss.
Okay, all right. Now, moving on, of course, to our stock of the day segment, and it's not probably the stock of the day, it's the casualty of the day, right? Britannia is a counter that we've chosen today, and this is on the back of the news update that came in yesterday, citing that Varun Berry, who's the MD and CEO, and of course the executive chairman as well, has decided to step down and has resigned with immediate effect. He's worked with Britannia for 13 years, and post that, he decided to resign from immediate effect. He did not serve the notice period. That's something that was mentioned in the press release as well. His notice period was waived off. To replace him on an interim basis, Natarajan Venkatramanan has been appointed as the interim CEO effective immediately, which will be for around 35 odd days, because from 15 December onwards, there is a new management that has been appointed, and we've been talking about this. Rakshit Hargave, who recently resigned from Birla Opus, has joined as MD and CEO, but his position will be with effect from December 15. Now, why is Street actually not liking this? Of course, Venkat Raman will continue as interim CEO till Rakshit takes over. But why is the Street not liking this? The question is, and the reason as to why it's not liked by the Street is because Varun Berry, in his recent con call in Q2, mentioned that he will be handling anything, he will not be handling anything directly. When he was asked about his role post Rakshit taking over as MD and CEO, he said he'll not be handling anything directly, but his job will be to run him in and make sure that he settles down well in his role. So that transition between Varun Berry to Rakshit Hargave was supposed to be a smooth one, but that has not happened. And that is the reason as to why the Street has not liked it, and we've seen the kind of pressure the stock has seen. It's recovered, of course, from its day's low point, but still continues to be under pressure. Now, if you take a look at the overall view that brokerages have on this particular development, Morgan Stanley has maintained equal weight with a target price of 5469. They've said that he's also resigned from another Wadia group, that is Bombay Dyeing. The board is confident, however, that no matter what, the company is going to achieve new heights under the new management, that is Rakshit Hargave. Investec also did come out with a note. They've maintained buy with a target price of 6702, a tall target price to say the least. Very sudden exit in 5 days after the call is something that was surprising to them, and they've mentioned that in their report as well. They've also said that they would have expected a smoother transition, but that's not happened. But having said that, overall, Britannia's fundamentals remain positive, and that is why they've not changed any, anything where the target price is concerned. So this is the overall view of what's not worked with Britannia today. Kush, I'll quickly come to you on this one. What are the charts indicating right now? Of course, today is one of, is of course on the back of a fundamental trigger, but overall, our charts looking constructive enough?
Now they're starting to appear a little constructive. I have been constructive on Britannia for some time because, along with Tata Consumer, this was the only stock which actually outperformed in the FMCG space, but went into consolidation for the last 2 months with a mild negative bias. Now, the medium-term support zone for Britannia comes in at 5,800. I'm rounding it off. It's a little lower, but 5,800 to round off. As long as the stock holds above that or comes close to those levels, it should be a good buying opportunity from a medium-term perspective. And if 5,800 is broken, then I think the structure could be disturbed. So yes, around these levels in that 5,800 zone, if it dips again, then you should consider buying Britannia from a medium-term perspective. Momentum perhaps is missing, but the risk-reward ratio turns out to be favorable here.
That's pretty interesting on that. Kush, the IT space, there's nothing happening fundamentally on the long-term basis, but the last 2 trading sessions I've seen a significant positioning coming in. Just it shows the last 2 days chart, Nifty IT index is up more than 2.5% almost. And strong longs are coming in the stocks such as in the mid-cap names such as Persistence, Coforge. How are you looking like, these stocks? You really prefer large-cap IT stocks or anything good in mid-cap IT where you can see just a short-term trade bet because fundamentally nothing is happening. Of course, the global sentiment has improved and because of that, the budgets might also help out the IT companies. But we want to know that technically which stock would be sound right now to take positions.
Yeah, and let's not forget sector rotation as well, right, Sharad? This sector's not really gone anywhere in the last about 5.5, 6 months, right? Even the IT index, if you see, and I'm giving a very broad range here, 36,300 on the upside and about 34,300 on the downside. That's the range play that you could well take. So if you're looking at a very broad view, if the index crosses 36,600 is able to sustain above it, that's when the IT sector gets into a bit of an uptick. Otherwise, this range play would continue. You're right. There is a lot of traction in the last couple of sessions, but I think that is largely owing to the the sector rotation. Because if the FIIs are considering long positions, the data doesn't show that yet. But if they do, then IT and banking's already run up quite a bit. But all of that said, the 2 names that I continue to like in the IT space from the mid-cap space are Coforge and Persistent. Coforge has today broken out of a downward sloping channel, and Persistent has broken out of that 6,000, about 59.50 range, which was the resistance for the last 7 to 10 sessions. So if someone wants to consider a quick trade, I would suggest Coforge and Persistent, but a small quantity and a tight stop loss.
Okay, all right. So that's with regards to where Coforge is concerned. But moving on, Suprajit Engineering is what we're going to put spotlight on. It came with its Q2 numbers yesterday. The stock is doing well in trade today, up 3.7%. Overall, if you take a look at the numbers, revenue was up 13-odd%, EBITDA up 58-odd%. Margins have significantly improved at that 10.6% versus that of 7.6%. And the company has gone and done a net profit of almost 51 crores versus that of 48 lakhs earlier. To take a look and to discuss further as to how the quarter has gone by and how things are shaping up, we're joined by Ajit Rai, who's the promoter and chairman at Suprajit Group, joining us now. Mr. Rai, a very good afternoon to you, and thank you so much for taking out the time. My first question to you is with regards to the entire quarter gone by. Things have improved so much as compared to Q2 FY25, especially if you take a look at the Suprajit Controls division, right? You've said that second half is going to be better. Even the growth this time and margins largely have improved in this segment. What's the outlook like?
Good afternoon, and thank you for having me on your channel. You are right. We had a very good quarter and half year. Business has grown very well, and the margins have improved significantly, as you said. The main reason has been the significant restructuring that we have been doing at the Controls division, which is our overseas division. And Suprajit Controls division has done exceptionally well during this quarter, where some of those restructuring and regrouping of our businesses has led to significant improvement in margin. Actually, Suprajit Controls division has been consistently doing double-digit margins in the last 2 quarters. due to all these restructuring efforts. So business has been good, and as we have said, in the second half we expect to do better than the first half. Also, very importantly, in the last quarter, third quarter, that is the current quarter, all the restructuring that we have announced earlier will be completed. Because of that, I think the performance will even likely to be better going forward. Not only the top line will grow, because we expect also some of these new contracts to hit the production, we also expect margin consolidation as we go forward.
I have a question on the margins front, especially because you're speaking about consolidation, and third quarter there will be some restructuring as well. So the margins which you have given is almost 10.6%. Mahima had mentioned this higher number as well. Interestingly, will you sustain these margins in Q3, or there will be some adjustments going ahead? So there might be, volatility in the margins, or will you maintain that?
I think there will be some restructuring costs that will be impacted in the Q3. But there is an ongoing process. I think the last 2 quarters and also even the previous quarters, there have been some restructuring costs. It's difficult to quantify that at this moment. But I think all of them would be in place this time. Will it change the margin profile? Even if it is, it's going to be marginal, because I think we have a fairly large operations, and these restructuring costs are not that high. So I don't really see it is changing the margin profile for this quarter. But having said that, we are really a long term, in this business. So 1 quarter numbers don't really matter. But I don't really see any change in the margins.
Okay, all right. Mr. Rai, with regards to, the Phoenix Lamps division, I was just taking a look at the numbers, and overall this quarter has seen a downtick, even in terms of margins and even in terms of top line growth. Just want to get a sense as to why has that happened. Here also you're expecting second half to be better. What's the outlook like in the second half, and what will be the levers that will cause growth in this particular segment? Because largely I think, your margins, overall blended margins could have been better if margins were not, would not have taken a hit in this division.
Agree with you. I think the margin profile we have sort of guided for Phoenix Lamps historically, as it was undergoing its own changes and restructuring, was that it will be between 12 or 13 to 15%. So in the last, this quarter, we have been at about 13.5 or 13.7%, whereas maybe the previous couple of quarters, we are more towards 15%. So we are actually still within the range that we have guided, but it's probably slightly on the lower side of that guidance. Now, in terms of the business, I think as we have announced that some of our exports got hit. That's why the top line didn't grow. And because of that, obviously the margins had some minor impacts. The loss of business has been largely because of the Middle East tensions, and we have fairly good business in the Middle East from Luxlight. That was affected. So that has had some impact. Having said that, again, we feel that in the second half, some of these things will recover and margins will probably also will recover. So we are within the range, but, some, fluctuations within the range is always happens for various reasons. But we do expect second half to be slightly better than the first half.
Understood. Mr. Rai, another question is the US tariff scene. There is an important commentary which came from Donald Trump that India-US trade deal is nearing its, end, you could say, and announcement would be coming in on the lower tariff side. But already the company has seen that impact coming in, and some pass-through was also there. But almost you can see Q3, we can see most one half of the Q3 is almost over. So will we see this tariff related pressure coming in Q3 also, because already half of the quarter is gone almost?
We do hope that, this quarter the two governments sign a trade deal, but it's honestly, it's not in our hands, and I don't know. And I don't want to expect a guess also on this. Having said that, I think, we do not have a tariff impact on our numbers. I think we have made very clear that most of the tariffs have been passed on to customers, and that we do not expect any margin issues because of those tariff-related issues. So obviously that will also not affect in this quarter also, whether the trade deal has been signed or otherwise. So we feel that, yes, it's a big challenge to convince customers. It's a lot of work for our people to, provide lots of data, because please understand, tariff is not only between India and the US. We operate in multiple geographies. All of them are supplying to US, China, Mexico, Morocco, Europe, Canada. All of them have different kinds of tariffs. So it's been a big task for our team, but they have done a phenomenal job in making sure that the company has not been impacted in the process. So we don't really see a tariff impact on our margins in this quarter as well.
Mr. Rai, with regards to the acquisition of SCS Germany, it's been 4 or more quarters now. Your losses have significantly narrowed. The EBITDA losses have significantly narrowed at 67 crores this quarter. Does this mean that you will be EBITDA positive by the end of this year and PAT positive by the end of FY27? Is that a possibility?
I do not want to make a second guess on the PAT for the next year. We have only discussed for this year. By end of this March, we expect to be EBITDA positive. You are right, the EBITDA losses have come down significantly. We have done significant amount of restructuring in Europe, including a warehouse transfer to Hungary from Germany, the tool room transfer from Germany to Morocco, significant restructuring in Morocco, downsizing of our German operation to meet the current requirements of ours as a group. Many such initiatives have done. In Canada, we relocated our facility. In China, a lot of issues were there when we took over the company. So multiple issues have led to this significant downtrend in the losses. I think that is continuing. And as I said, then as you rightly said, by end of this financial year, we will be EBITDA positive. And I think the entire exercise will lead certainly to a much better year for the coming year.
Just one last question. Last time you did mention, in fact even this presentation mentions that the global competitor which went bankrupt, you've seen significant new inquiries because of that. Can you help us quantify as to how much of a benefit will you be able to garner from that? And secondly, post the US-EU trade deal that has happened, you will be a big beneficiary. How much of a benefit are you expecting from both of these aspects, if you can help us quantify that?
In terms of, I think the first question is regarding Phoenix lamps, if I'm not mistaken.
Phoenix lamps, yes.
So what is happening in this business is that halogen lamps business is that high-cost competitors are finding it hard to survive. And those cost-efficient and operationally more efficient companies like ours are able to win larger contracts. And those, loss-making companies are getting into insolvency procedures and difficulties to sustain their operations. I think that's where the green shoots are there for us. We're in the aftermarket, and one of these big competitors have some difficulties at the moment. They may come out of the insolvency, I do not know. But I think the point here is that, the customers gets panicky, and they have been asking for multiple inquiries and multiple quotes for many things. In the next 6 months, we'll get to know clearly whether these things will translate into business. Some of them have been translating into business. In fact, we recently won a couple of good contracts thanks to this. So we expect that to continue. So we do expect that we will have a good, traction, and we'll continue to consolidate in the Phoenix Lamps division as a standalone, solid global manufacturer, giving the best options to all customers. So I think that is our position on that.
Right. Okay, Mr. Rai, thank you so much for giving us all those insights and, of course, taking out the time and speaking with us at NDTV Profit. All right, so that's the management of Suprajit Engineering. The stock has seen good gains in trade today. Cooled off a tad bit from its day's high point, but still up by about 3% odd. Moving on from a positive stock reaction to a negative stock reaction for second day in a row, transformers and rectifiers. Let's try to pull that chart up. It's down by about 10%, still 10% down. So it's not
down 30 almost percent.
Yeah, 30 almost percent in the past two days on the back of course, the numbers plus World Bank putting allegations of
and companies' clarification came, but still.
Post that also we've seen that kind of downtick in the trade. In fact, we also spoke to Transformers and Rectifiers Group CFO, Mr. Chanchal S. Rajora, earlier today about the World Bank allegations. Listen in to what he had to say.
We were also surprised when we got this letter on 4th of November from World Bank. Basically, in 2020, we had done a project in Nigeria right? And we were part of basically a bigger project which was funded by the World Bank, and our contribution was around $24 million, right? And we had supplied all the transformers, and we have received the payment also, right? And we were actually taken aback with this, why this has come up into to us, right? There were some issues with this order on a border level, and then World Bank has last wrote us in 2023 that there are certain changes we wanted to see that is happening in the company or not regarding the corporate practice and us, and we told them anytime you are welcome if you want to see anything. Well, they did it this as per our information, they did it with all the companies which were involved in this particular project, and after that we never heard anything about from them. So suddenly this has come up, so we are taking up with the World Bank very strongly that why this has come up to us.
No, but the allegation is alleged corruption and fraud. So corporate governance is a different thing. It's not about issues with the order. The allegation is of corruption and fraud. Where do you think that would have come from?
No, we don't know, because we were not at all involved in any kind of these things, and we are very, very clear from corporate practices in our side that we don't tolerate these kind of things if anything
What
comes
is
up.
the mechanism you have to challenge this?
So, you know, we have already mechanisms in place, and we are taking it up on that, and at every level there are the controls in our companies in place. Look, understand, if the processes and the governance is not in the company, we cannot be the first company in this country to declare the results in 8 days' time, which takes a great amount of energy and great amount of work involved into that.
But specifically on this Nigeria project, you said that it's from 2020. When was it completed?
Look, this project was completed in 2022.
Okay.
Right, we got the 90% payments of the entire transactions in 2022, and last 3 transformers which we sent them, they were toppled in the port. So we have to basically make the new transformers and send them, which we did in 2023-24, right? And the payment of the balance 10% we received in this year in April itself. So, you know, understand one thing, had anything was there related to us or our practices or ethics, World Bank would have not released this payment to us.
That's a clarification coming in from the management, speaking exclusively to NDTV Profit. But a major development in Maharashtra has been there. This may have implications for some of India's oldest and most influential charitable bodies. The state government has passed an ordinance that changes how public trusts are structured, and this could directly affect the Tata trusts. Let's go across to my colleague Nisha Poddar for exclusive details. Nisha, what are you gathering?
Right. So what we have gathered is an ordinance which was passed by the Maharashtra government with effect from September 1st, 2025, which is on public trusts, and it's an amendment. Now, what it states is that the ordinance limits the number of life trusteeships or life trustees on the board of any public trust. That's one point. The second important point is that the renewal of trustees or any removal has to be unanimous as per this particular ordinance. Now, the implication of this could be direct on Tata Trusts, which had, remember, taken some critical decisions of renewal and removal in the month of October, because any changes made post 1st of September 2025, from which date the ordinance is going to be effective, all the changes made and all the considerations will have to be reconsidered. Now, it also puts in spotlight the resolution by Tata Trust, which was passed in October 2024, which says that all the trustees would be renewed at the time of renewal, will also be renewed as life trustees. Now, remember that this particular ordinance makes a rule that only 1/4 of the Tata Trusts or any public trust can be life trusteeship So therefore, the resolution could be under consideration. We'll have to really go back for rethinking, and maybe changes will have to be made as per the new rules and new ordinance that has been passed by the government. So it has huge implications on two important decisions that have been taken by Tata Trust. One was Venu Srinivasan's renewal, not just as a trustee, but as a life trustee in October. And the second, even removal of Meli Mistry. And you will remember that Meli Mistry had reached out to the charity commissioner to state his point of view before it is sanctioned. His removal from Tata Trust is sanctioned, and whether or not this ordinance really makes its way and makes his removal also legally re-questioned.
Yeah, thank you, Nisha, for bringing us that exclusive. But it's time for a quick break. Stay tuned to NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में profit लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Welcome back. You're watching India Market Close. I'm Alex Matthew, that's Sharad Dubey, and this is Mahima Vachajani. Hi guys.
Hi.
So let's talk about mutual fund data at the start, right? Because
Yes.
it's interesting data if you think about it. The question is, do you want to look at it from the positive lens first or the negative lens first?
I think markets are giving a good recovery, so positive.
Positive lens first. Okay, so positive lens is that if you look at the overall composite number, you have inflows of over 2.1 lakh crore rupees.
Yeah.
And this is really par for the course because at the start of a quarter, you will normally see significant inflows into fixed income mutual fund schemes. In September, you saw outflows of about 40,000 crore rupees on the composite level. And that's because you saw 1 point something lakh crore rupees of exits or outflows from fixed income mutual fund schemes.
So these are treasury adjustments.
Yeah, absolutely. There's a lot of institutional flows into fixed income mutual fund schemes. The other positive is that SIP flows are at an all-time high once again. 29,500 odd crore rupees. Remember that this is the gross number. The net number will be considerably lower. In the past, it has been about 40%, but I won't be surprised if it's only about 35%. But still, it means that durable money continues to come through in the mutual fund space. That's the positive. Negative?
Yes. Yeah.
You have to talk about the negative.
Yes.
The negative is that the inflows into actively managed equity mutual fund schemes have not been very substantial in the month of October. If you remove the new fund offers and the flows through those schemes, then it comes to about 20,000 crore rupees. And you compare that with about 29,000 crore rupees in the month of September. And a large part of those inflows, and this includes NFOs as well, have come through in flexi cap funds, which is close to 9,000 crore rupees, which is a good sign because people are moving away from your sectoral thematic and into your more diversified schemes, which is always a good idea.
But for NFOs, you were just mentioning, right? There were 4 NFOs in the thematic and sectoral and 2 flexi caps. So any idea about that bifurcation of flows? Because NFO has seen quite a significant jump from last month.
Yeah, absolutely. So there were 6 in total.
6 in total.
The flexi cap schemes have gotten, the new schemes have gotten inflows of about 1,700 crore rupees. And there were 4 sectoral thematic schemes that were launched, close to 2,500 crore rupees. So all told about 4,173 crore rupees. The other factor, guys, is that gold ETFs have continued to get inflows. But it's 7,800 crore rupees compared with about 8,200 odd crore rupees.
And this trend has been going, on a longer basis for months. But Alex, the street is a bit spooked because of that equity inflow stuff. So what is it? Is there...
So we were speaking to somebody from the industry, Sharad, and really the suggestion is, and it's a pretty logical thing to think of, right, is that it was festive season. There are a lot of expenses that come through on account of it being festive season. And so the natural activity, the natural reaction to something like that is to pause a lump sum that you might otherwise have put into the market.
Makes sense.
They expect that the signs that you've seen in the first 10, 11 days of November are positive, and that SIP number is critical to watch, of course. If that stays durable, in fact, think about it. Your gross flows through SIPs are more than the total flows into actively managed equity schemes, which is quite significant.
A good number.
So and that shows that Indian investors are disciplined, right? Because despite of the festive sense that spends that you were talking about, SIP inflows have remained intact.
Absolutely. So that's the long and short of the mutual fund data. What did you make of it? Let us know in the comment section. But we have to move on to other stocks that are reacting. By the way, Vodafone Idea is up and about, and it's one to track right now, 7.7%. There's a conference call that is either underway or we will go to. It's probably underway. You will see some updates coming through at the bottom of your screen. So I'd encourage you to keep one eye on that. The other you can look at Sharad and Mahima. But having said that, let's talk about one more stock that is reacting, Jupiter Wagons. On the back of earnings, right? Just pull up the intraday chart and you will see a very sharp drop. And that's because the earnings have come through not really very great set of numbers. 25-26% downtick in EBITDA, and the revenue is also reduced by about 22%, as a result of which you have the PAT number that's down close to 50%. And that's not really something that the street likes very much. Kush Bora of kushbora.com and Pankaj Pandey of ICICI Direct with us this afternoon. Gentlemen, good afternoon to the both of you. Pankaj, if you have looked at Jupiter Wagons at all, and the numbers came through just a short while back, but it's not just Jupiter Wagons. It's a lot of these railway plays. Or you're not really seeing the money come through in a substantial manner in the second quarter. Does that improve in the second half? Would you use opportunities to buy in, anticipating that some of that capital flow will come through?
Yeah, hi, good afternoon. Thanks for having me. I think, see, up till now, this entire year, largely it is the consumption pact which is sort of done well. Largely, most of the news flows have been around that. I think Capex, whether it is road, railways, or other, has sort of taken a backseat, at least from the price performance or from the news flow perspective. But our sense is that Capex intensity is expected to be maintained at 3% of the GDP, and as we are sort of approaching budget, this will be a slightly better theme to sort of look at. So Jupiter Wagons specifically, you don't have a coverage, but we would want to sort of look at Capex place from here on. Largely because, see, structurally we carry a young population. You can't really do much without not doing Capex. So Capex is expected to remain a central theme, and I think most of the conditions are in place for Capex to sort of pick up, except for the trade deal. So I think as and when that happens, even the private sector Capex is expected to sort of at least become better.
Okay, all right. So that's the view with regards to where Jupiter Wagons is concerned. But the other counter, that we were just talking about is Bharat Forge. If you can try to pull that chart up on the back of its numbers yet again, has seen a good uptick in trade today, up 5% and at its day's high point as we speak. Kush, anything on the charts that you're observing, maybe a buying point right now?
Oh yeah, there's a very clear breakout, and the stock was languishing around the 1300 mark for some time now. Today, with this kind of a move, it's given a very clear breakout around in bottom formation above that 1300, 1350 zone. I think now it enters a new territory where on the upside you could well have a move towards 1460 once that is taken out, 1540 as well. I think this is a good move, a healthy one, comes after a bit of correction and consolidation as well. So yes, if you have, you should continue to hold. If not, for levels of 1540, you could take a fresh entry, fresh positional bet here as well. Keep your stop losses near the 1300 mark. So yeah, this is a good breakout volume back. Could continue higher levels.
Okay. Okay. The other counter, Kush, that's been on traders' radar is probably Eternal. I mean, it's just very difficult to understand as to what's happening with that counter. But it's crossed that 300 level now, 300 mark now. 305 is where it's trading at, up 1.4% almost. What are the charts indicating?
Yeah, so for me, about Eternal, it's a matter of when to buy and not if to buy. So yes, the stock had a very sharp up move and is now starting to consolidate. In fact, if you look at the recent rally that it had somewhere mid-July, the retracement, 61.8% retracement for that comes at precisely at 300. The stock has tested that level for the last 3 sessions and continues to find support there. So maybe it could turn around from here on as well. But I would take a staggered manner, staggered buying kind of an approach towards Eternal. There is a gap at the 280 mark as well. If it gets filled, then the confidence on the stock becomes even higher. But even around these levels, it's not a bad idea to start nibbling into the stock. So I remain constructive on Eternal from a medium-term perspective. This dip should be taken as a buying opportunity, albeit in a staggered manner.
That's pretty interesting view coming in for Eternal, but some stocks are buzzing on trade, both positive earnings impact as well as negative earnings impact. Jasmeet will be coming and giving us a positive coverage on it and why these stocks are going up in the positive side. And interestingly, Jasmeet is wearing a green shirt also, while
I think it's yellow.
It's yellow, but it's shade of green, yes.
Close enough.
And Vansh is also joining us with the negative earnings impact as well. Jasmeet, let's start with you. What are the stocks you're tracking here?
Well, starting off with the ESAB Limited, ESAB India, we look at the numbers, we see a strong set of numbers coming in from the company. And on the other hand, the other incomes are nearly up 86%, which is adding up to the profit, which is nearly up on 83%. If you look at the margins, they have improved on the back of cost efficiency, which we see in this particular quarter. While in terms of the other items, this exceptional item, which is adding up to roughly 30 crore in this quarter. That's why the net profit's up nearly 83% in this particular quarter. In terms of the other earnings, I have Ather Energies. We see revenue is up over 50% for the company, while the losses have narrowed in this particular quarter. That's why the positive buzz in the trade. While the margins have improved on the back of, again, cost efficiency, they have improved the cost in this particular quarter. While in terms of commencement of the operations, they yet to see a new operational center in Mumbai. While lastly, I have KC International. If we look at the overall key highlights, the margins have expanded in this particular quarter, while profits are sharply up. In terms of revenue from the T&D, the major source of revenue for the company is nearly up 44%, which contributes almost half of the revenue. In terms of the other segments, we see slight pressure coming in from oil and gas pipelines, while the transportation and civil also degrew in this particular quarter. If you look at the order book, company recorded the highest ever order book with L1 as well as the order book roughly standing at 44,000 crore in this particular quarter. In terms of the other details, we see debt has increased in this particular quarter, but it's still lower to compare to the percentage of the revenue, and they expect it will normalize going forward. So all in all, these are the positive stocks that are buzzing in trade today.
Yes, we had one side of the coin. The other side of the coin, the negative stocks. Vansh will get us that list. Vansh, which are the stocks in your radar?
Well, thank you for that. So firstly, let me start off with Sula Vineyards. Again, a muted set of numbers coming in from Sula. If we look at the own brand performance, it has been impacted by the disruptions in Telangana. Also, if we look at the states like Haryana, UP and Rajasthan, they have recorded a double-digit growth out there. And the sales through the CSD, that is a canteen stores department channel, has more than in fact doubled. If we look at the earnings, the EBITDA was down by 24% and the net profit was down by 58% at 6 crores versus 14.5 crores on a YY basis. The second on the list is Balaji Mines, again a muted set of numbers. We saw the EBIT from the mine segment was down by 9.3% and the hotel division EBIT was also down by 38% as well. If we look at the earnings, the net profit was down by 15% as well. The third on the list is C Info System, interesting stock. If we look at the numbers, they have reported the lowest ever profit at least in the last 12 quarters. Also, if we look at the map-led business, it has continued to deliver steady performance for the company. And the Internet of Things business, that is a segment, has showed strong revenue growth and it has been impacted by one-off cost acquisition by the company. The acquisition was for a 96% stake in a subsidiary as well. If we look at the numbers, the net profit was down by 59% at 18 crores versus 46 odd crores. So clearly a negative set of numbers coming in from CE Info Systems as well.
Got it. All right. So that's a wrap of the stocks that are buzzing on account of positive and negative earnings. But one eye Dalal Street is keeping on what is occurring in Bihar. And this is really important because you have today the fate of the elections that will be decided, the second and final round of the polling. Tamanna joining in to talk about the key developments today. Tamanna, the first round of polling, one of the big takeaways was that turnout.
Yeah.
Is that the same thing that you're seeing today as well?
It is. It is. So the data that we have till 1 o'clock shows another day of bumper voter turnout. Now the question is, what does it mean? So Bihar elections and why it matters to the street, if at all. So number one, if all things remain the same, it doesn't really matter to that extent. But if you recall, after the first phase, there was a bit of stress in the markets, and this was because of the bumper voter turnout. Now, in first phase, you had a 65% voter turnout, which was historical. The last time Bihar had that kind of a voter turnout was in 1997 or 1998. In phase 2, the data which has come at least till 1 p.m. shows a 47.6% voter turnout. This was around 42-43% in the last election. So you're looking at the possibility of record turnout in Bihar this time. Now, there are two parts to this, right? What does this mean? Now, a high voter turnout is sometimes seen as a vote for change. That is what election and political strategy sometimes says. Though I must hasten to add that there are enough examples of high voter turnout where people have come out to vote for the incumbent government and there hasn't been a change. This time that question also gets raised because there is a new player in Bihar. You have the erstwhile political analyst Prashant Kishore, who has launched his Jan Swaraj party. They're fighting in pretty much all seats, and the question is whether this is going to make an impact or not. So watch out for that high voter turnout and the impact it has. Remember, exit polls will be out this evening. This is also something that the street will watch very carefully. We will be live on it on NDTV Profit. Now, the other part is why the high voter turnout. One factor to look at is that there is an exercise called SIR, which has taken place in Bihar, where all of the duplicate voter IDs have been deleted. People who have been dead and still on the voter turnout list have been deleted. That means the number of voters in total is less. As a percentage, this is why perhaps optically the voter turnout is looking higher, because the denominator has shrunk because of SIR. So keep that in mind as well. Having said that, the 2 or 3 things that the street will look out for, amongst others, is the size of the voter turnout, what the exit polls say. If it looks like there is continuity, and you see that on 14th November, that might be a reason for the street to cheer.
Absolutely. All right. So quite a bit to take from that description of what is occurring in Bihar and what the street is looking for. Thanks so much, Tamanna, for laying that context for us. By the way, equity markets recovered quite smartly from the low point of the day, particularly the benchmark Nifty 50 up about 0.9% from the low point, and you can see that very clearly in that graph. Mid-cap index also quite considerably off the low point of the day and currently trading with gains of about 0.4%, similar to the benchmark Nifty 50. But the small cap index once again languishing today, still in the red. The recovery there is not as substantial, just about 0.4% for the small cap index. Let's also pull up the advanced decline ratio just to look at whether the breadth has shifted at all over the course of the session, and it has indeed narrowed quite considerably. I wonder in the last half an hour or so of trade whether that edges toward even Stevens or even a possibility of the greens edging higher. Interesting move so far.
The defense pack has really been doing wonderful, and Mahima and all, we are discussing yesterday's trading session as well. Now there is an angle of India-US trade deal to have a completion, and last week there was a 10-year defense agreement signed between India and US. Maybe the street is cheering that because no large domestic flows have been announced over the last 1 week or so. You can just pull up the Nifty defense, or you could just pull up the defense related stocks. GRSE,
it is in fact the largest sectoral gainer, about 2.3% higher at this point. And you can pull up the internals. You have something like an Edtech, you have data patterns, Garden Reach Shipbuilders. By the way, they spoke with NDTV Profit earlier today, and they spoke about their earnings, a bumper set of numbers, not least of which through the revenue uptick. If we have those numbers, we should pull them up on the screen. And you had a margin expansion during the quarter, but more importantly, you have the management that has said that a 25 to 30% top line growth is likely to be the run rate, at least for the next 2 years as well. Listen in to a slice of that conversation, and then we'll go to our analyst to figure out whether this is something that you should bet on.
Our shipbuilding capacity initially was 20, which we increased to 24 during 2023-24. Currently, our shipbuilding capacity is for concurrent construction of 28 platforms. With the ongoing modernization, we intend increasing this capacity to 32 ships by 2026. But still, this will not be enough. So we are going for brownfield expansion as well as greenfield expansion. Brownfield expansion within West Bengal at 3 locations. The DPR is already ready, and we are moving ahead in a fashion so that the capacity gets augmented to 40 ships in the next 4 years. In addition to the brownfield expansion, we are also looking at a greenfield facility in the West Coast. So all put together, we have been systematically increasing our capacity, and we will be ready in another 4 years to take on platforms which currently we are not able to take on. That means platforms above 300 meters length.
So that was the management, the Commodore, talking about the capacity and whether or not they're going to be capable of taking on the projects that are currently coming their way. Remember, shipbuilding is something that the government is focused on very, very closely. And there's also a new order that will come through from the Navy in the form of those corvettes. These are now weaponized ships, and large ships at that. The expectation is that that order will come over the next few months, and that will kick in 2 years from now. So Pankaj, question to you. What the management told us is that because of the vintage of some of the orders that they're currently executing, over the next 2 years, they expect that the run rate will remain stable at 25 to 30%. Does that, is that good news according to you, and would you buy at even these levels?
So on Garden ship, overall Garden Reach, our rating is hold largely because, see, while yes, they're sitting on an order book of about 21,000 or 22,000 odd crores. See, bulk of this order book will get executed over the next 2 years, and which is why we would expect, say, top line growth of somewhere about 34-35 odd %. The challenge is what lies after that. For that, they need to sort of win new orders, which is where our sense is that probably FY27 onwards, the order or the revenue growth might sort of taper down, and which is why we have a hold. I think Cochin Shipyard within the shipbuilding space looks structurally a lot more positive to us. Garden Reach I think, like a reason highlighted, I don't think we would be recommending this as a buy, though the numbers for next 2 years are looking or would look quite good from a growth perspective.
Kush, any of these counters where you think charts are constructive enough? Any defense counters that you're looking at right now?
Mahima, in fact, if you see the defense pack has been doing well for the last 3 sessions today included, but just as the case is with the Nifty India Defense Index, same is the case with a lot of components as well, which is a lot of these stocks after the run-up have come very close to those resistance levels individually as well. So BDL has near-term resistance at 1550. BEL has resistance at 430 odd levels. Even GRSC for that matter is now trading close to the recent swing highs of about 2800. Point being that, since the stocks are already, close to those resistance levels, you might want to wait upon fresh purchases. If you do have them from slightly lower levels, you might book profits now and perhaps reconsider either on breakout or on declines. But right now might not be the best time to enter, at least from a very near-term perspective.
Okay. All right. So that's with regards to where the defense pack is concerned. But, it's that time of the show where we bring in my colleague Somit Sarkar, who joins us with all the chatter that he is hearing from the dealing room. Somit, what are you hearing today?
The market has been moving into gains and losses throughout the day. In fact, from the day's lowest point, if you see, a market has managed to gain close to 200 points on an intraday basis. But what dealers are indicating is that sustaining above the 25,600 is very crucial for the Nifty for some more upside going forward. So 25,600 is the level that we need to watch out for when it comes to the Nifty index. And apart from that, sectoral Nifty IT is seeing strong buying interest in trade today. But stock-specific action, firstly, trend. Now, yesterday, it was one of the top losers among the FNO stocks, and one of the major reasons behind this was that there was heavy selling that we had seen on mutual fund desk, is what dealers are indicating. In fact, one of the mutual funds who was a holder in the company has completely sold out its stake, and dealers are indicating that Motilal Oswal mutual fund might be the seller who has completely moved out of trend. And given the fact that the selling is now over, we are seeing some up move in the share prices in trade today. When it comes to Voltas, there are sell flows seen on trade today, and this is largely an anticipation of a potential weak second quarter numbers that the street is expecting. So on the back of weak numbers, we are seeing this kind of a downtick when it comes to Voltas. When it comes to Oberoi Realty, there are buy flows on institutional desk. Both foreign and domestic institutions have been buying this counter in trade today, and dealers are expecting or indicating that the delivery volumes could be on the higher side for this counter. And lastly, Biocon. We did speak about Biocon yesterday as well. Results are today, and what dealers are indicating is that some potential corporate development might be announced related to biologics, and this could either be a demerger or merging biologics with Biocon itself, so that the holding company discount moves out. So keep an eye out for Biocon earnings. Some announcement or some corporate development related to biologics, which is its subsidiary, could be announced today.
All right, Somit, thank you so much for bringing us those details. One counter that's zooming in trade right now as we speak is Yatra Online. Let's try to pull that chart up and see as to how that chart is fared. And that's on account of its Q2 numbers that are flashing on your screen right now. EBITDA at 23 odd crores versus that of 14 odd crores. Look at that chart. I mean, look at that spike coming in. The margins have also significantly improved. Net profit up 94.5% at that 14.2 crore versus 7.3 crore. Overall, the numbers look really positive. I remember last quarter also, when they came out with their numbers, we had seen a similar reaction in the stock. And this is majorly because the company is now shifting more towards the B2B travel segment, that is their corporate segment, and shifting away from the consumer business, which means for them, the growth is going to be better in terms of volumes, margins are going to be better, and overall, if we take a look at the MICE segment, that is the meetings and initiative segment, that is also going to grow for them. Look at that stock. I mean, 18% in, that second.
Significant spike coming in.
I know.
But it's just the business model, right? There's a significant change happening. But is this happening just for one quarter, or will we see this positive effect in the next coming quarters?
It's been happening for them for the past 2 or 3 odd quarters, and that has now, I think, started to fructify, and that's been seen in the numbers as well.
Oh, that's
so I
pretty
think
interesting.
That's one of the reasons as to why the stock is doing so well. I think I'll quickly take Pankaj's view also on this one. Pankaj, any view on something like a Yatra Online or anything in this space that you're probably looking at and liking?
So except for hotels, we don't have coverage on any of these names, so I won't be able to comment.
Your view quickly on the charts. I mean, this is of course a one-off spike that we're seeing, but it's a beautiful chart to look at, right?
Yeah, indeed it is. My suggestion would be to book partially, about 50%. But given the kind of momentum that the stock is witnessing, we should continue to hold the rest with a trailing stop loss at 161.
Okay, all right. So that's the view with regards to where charts are concerned for Yatra Online. But with that, Kushan Pangat, thank you so much for taking out the time and giving us all those insights throughout the show. It's time to slip into a very short break, viewers, but we'll be right back getting you BTST for tomorrow's trade. Stay tuned.
Namaste, India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India, from where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator.
The stock in focus needs no introduction. That's Bajaj Finance. Stock has tanked after its Q2 earnings, but has the street punished the stock a lot more? So we have given a bulls versus bear case for the stock of Bajaj Finance. The stock is down almost 8% in the day's trade. Has it taken a big beating, or will this continue going ahead? That's the question. But let's put in how this situation has panned out. Our bull cases, firstly, the Q2 numbers we see, they have been largely in line. But if you go into the details, that's where the devil lies. Higher credit costs, that has impacted the overall numbers, and street also has been spooked because of that. Let's get into much more details in the Q2 numbers, the bull case numbers. Healthy growth coming for the gold loan and the car loan segment, but overall, if you flip the coin, they have cut the AUM growth guidance up to 22 to 23%. Earlier, this number was on the higher side. Now they're expecting to add 1.7 crore new customers in FY26 as well. But on the other hand, if you see the two-wheeler and the MSME segment, that has weighed in on the asset quality, and that has given a stress to other NBFCs as well, which we'll come to these points as well. But let's look at the numbers, what the Bloomberg numbers say. The 12-month return potential after this fall has gone up, and it's 30%. But NBFCs, they have cracked today in the day's trade, and after the MSMEs commentary which has come in, who have an MSME exposures. So shorts are developing in NBFCs and certain banking names as well. Overall, Bull case, Bob Capital maintains buy rating, highest target price that comes in at 1329 rupees. But on the other side, the bear case, that's Bernstein, they have maintained a sell rating with the lowest target that comes in at 640 rupees. So there is a bear case as well as a bull case coming for Bajaj Finance. And overall in the day's trade, markets have punished Bajaj Finance, of course, on the higher valuations. And that's why we are seeing significant revisions as well. But certain brokerages say that this might be a tactical buy as well. That also, we'll get you that research as well. And this is the entire bull and bear case scenario. So this is the overall development coming in this space.
Absolutely. Thank you so much, Sharad, for getting us those details. In fact, as Sharad mentioned, first, valuations, of course, being a concern. I think 7 times price to book is not cheap for something like a Bajaj Finance. And secondly, I think the FY26 guidance cut in terms of where the AUM stands is something that the street is not liked, and that's been reflected in the way the counter has reacted today. Let's also get in views from our guest with regards to Bajaj Finance. We're joined by Aditya Agrawala of Invest4Edu and Sandeep Bandyopadhyay, who's from IndiTrade Capital, joining us now. Sandeep, I'll come to you on this one first. What's the view like where Bajaj Finance is concerned? And of course, there's a ripple effect of that on Bajaj Finserv as well.
Well, I think, at that kind of valuation, the margin of error is absolutely not there. Now, they have two challenges. One is, of course, they have lowered their guidance on the growth. And second, the asset quality is not as per, what was expected. So under these circumstances, the market is not liking the numbers and not liking the commentary. So there has been a significant correction. And you remember that, this is still trading at a significantly higher valuation in terms of multiple to the book. Whereas if you compare with State Bank of India, even a bank, the largest bank in the country, that's trading at about 1.1 time book. And Bajaj trades at 5.7 time book. So, under these circumstances, the way the asset quality is expected to pan out on the MSME and the small loan segment, where Bajaj Finance definitely has a large chunk of its assets deployed, I think I'll be cautious, and I will rather go and buy some of the larger banks which have a less exposure to these MSME and unsecured loan.
Okay, all right. So that's the view with regards to where Bajaj Finance is concerned. But sticking with the BFSI space, talking about Karnataka Bank, let's try to pull up the counter and see as to how that's doing in trade today. Overall, if you take a look at the numbers, asset quality has improved. NIMs have inched up slightly on a QOQ basis, but cost of funds have also improved on a QOQ basis. To take a look as to how the quarter has gone by and how things are shaping up, we're joined by Raghavendra S. Bharat, MD and CEO of Karnataka Bank, joining us now. Raghavendra, hi. Thank you so much for taking out the time and speaking with us at NDTV Profit. Mahima this side. My first question to you is that asset quality has shown a steady improvement this quarter. Just want to get a sense, and this is of course on account of both, gross NPAs as well as both gross and net NPAs improving, right? Is this on account of better recoveries or lower slippages, or is it more towards the prudent underwriting that has taken place? And do you see this further improving in second half of FY26?
Yeah, good evening. Yes, as you rightly mentioned, with regard to the improvement in the asset quality, that has reflected in our results also. It has improved from 3.46 to 3.43 for 3.30 rather GNPA. Even NNPA also has shown an improvement. This is mainly because of the good recovery as well as the tight recovery action initiated by the bank with full concentration, because we have zero tolerance for slippage also. With that collective efforts, it has shown improvement.
That's pretty interesting. Sharad here. Mr. Bhatt, the question remains is the NIMS outlook. There has been a 10 bips jump on a year-on-year basis in your current NIMS number. But most of the peers have stated that there might be some kind of green shoots coming in NIMS also in the coming 2 quarters. Do you also feel the same? What's your NIMS outlook going ahead for Karnataka Bank?
Yeah, it was rather better, and it is now moderated because of the EBLR since last 1 year, there was almost 1% drop. Because of that, our EBLR linked advance rate is around 77%. It has immediately affected our asset portfolio as far as earning is concerned. Likewise, on the liability side, it happens only on the due date. The reduction in the cost is not in proportion to the asset side. Therefore, NIM has affected a bit. But whatever has, I feel worst is over now. It has to improve only. And coupled with the asset quality improvement and our focus on CASA, NIM has to improve further.
Mr. Bhatt, with regards to where provisions are concerned, they've dropped sharply this quarter. Do you think that this is the sign where we consider this as normalization, or there's a one-off that's been played out this quarter?
Yeah, as I mentioned earlier, the focus is on recovery and slippage towards the NPA. It has to further improve only. And given that, yes, our recovery actions also support, and including our the mechanism for recovery from head office level also, in the regional office level also, it has to further improve.
Pretty interesting on that. There are diverging thoughts coming in the banking space as well. But the stress, that's the concern. Recently we did Bajaj Finance numbers also, where they had spoken about the SME segment stress. Now, your books also, has the stress come this time, or will this stress continue in the third quarter as well? We need your views of this MFI segment.
It was with regard to MSME. On the one side, there is a focus for improvement in business in MSME. MSME consists of both manufacturing and service sector. No doubt that is the industry is moving like that. Growth has to happen in MSME. Simultaneously, when the growth is happening, there is bound to be some amount of stress also. So we are also not an exception to it. But having that compared to Q1, the improvement has shown in the stress level of MSME also. Our focus is on MSME while it is there. We are geared up to control the stress level also.
Pretty interesting on that front. Last question I have is on the gold loan segment. You know, what's the outlook looking like? The prices were on the higher side, and now we're seeing a kind of a cooling off in gold prices, but still at stable levels. So how is your outlook looking like for the gold loan segment now? Because now the wedding season is also coming in some days.
Yeah, yes. Last year compared to year on year, there is an increase in the gold loan to the extent of around 30%. Last year, full financial year, the growth has come from mainly from gold loan. Around 4,000 crores of gold loan in the books. It has come in the books. This year also, in the initial stages, first 6 months, the growth has not come adequately from the gold loan, based on various factors. However, having said that, it has grown negative in the first 6 months. The growth has started coming because of our focused attention to increase the gold loan portfolio also, because that is one area that adds to the improvement of the NIM. Therefore, focus is still on gold loan. Therefore, I am quite confident that growth has started coming from September onwards, and in October it is still better. Focus will continue to towards the gold loan, and we are quite confident that gold loan portfolio will improve further, like last year.
Bullish commentary coming in from the management of Karnataka. Thank you very much, Mr. Bhatt, joining us and taking out time at NDTV Profit. Aditya, the question is for in the banking space. We discussed a lot, but we will be focusing on that, and that's the number coming in for BLS International also. That's down almost 3%. But
right. So
Vodafone Idea is there on the screen. It's up 7%, and we are cutting into the con call now.
Order is pretty clear, and government being a 49% equity holder, and the government making it also amply clear that, you know, in the Indian context, 3 private players are required. We are looking at the solution, which we believe will be best and with a long-term view from the government. And our sense is that since the Supreme Court order has come recently, might be there would be a little bit of a dependency of that with the banks when they are looking at a long-term funding. But we are engaged with them and we are kind of working pretty closely, and as and when we get to here, we'll come back to you. Yes, on the question on the credit.
Sure. So, Saurabh, the current credit rating, as you know, is BBB minus. So that stays where it is. Maybe if you can elaborate your question.
Oh, sorry, no. What I meant was you had spoken about raising credit from non-banking sources, I guess private credit.
Oh,
so, yeah. So I just wanted,
so
can that be something which can be advanced ahead of, say, funding from banks?
Yeah, so Saurabh, I think we are, as we said, we are talking to many banks and the NBFCs both. And as and when we get closer to the deal, we'll come back to you. As we speak, we are engaged with multiple partners at this point in time.
Okay, sure. And just a second question. Could you just remind us of the total quantum of AGR debt which is outstanding as of September? And within this, how much would be the principal portion?
The principal and the interest we can't share like that, but as of September 25 September, it's around 78,500 crores of total amount on the AGR.
Okay, that's perfect. Thank you.
Yeah, thank you, Saurabh.
Thank you. Next question comes from the line of Sumangal Nevatia with Kotak Securities. Please go ahead.
Good.
Well, that's the con call coming in, and we are tracking Vodafone Idea's developments as well. Sorry to keep you waiting, Aditya. I just wanted to take your views on two counters. Of course, Vodafone Idea would be there at times. We are not very comfortable with this counter, but in case if somebody is holding some gains in this stock, Vodafone Idea, say suppose somebody entered between 7 to 8 with a rally which is coming in, is the right time to take some profits back home? And then, of course, we'll ask your view on the banking space as well.
I think one should continue to hold because there is some kind of a volume activity that is building up in Vodafone Idea of late. And if you've already taken a position in Vodafone Idea at lower levels, not a bad idea to maybe trail your stop losses to 9 rupees and continue to hold on to them, because if there is any positive development, it will be after a multi-month that the stock, or maybe multi-year, that the stock will break out of this hurdle of 11 rupees. Once it breaks out of 11, then there is room all the way till 13, 14 rupees on the upside. So my sense is, Sharad, one should continue to hold. If you're already long on the stock, place a stop loss somewhere on 9 rupees. If you bought lower, trail your stop losses. And once stock breaks out of 11 bucks, maybe 13, 14 is something that is on cards.
Interesting. Target price of 13 to 14 for Vodafone Idea, but keep your strict stop losses in these type of counters. There is volatility always there. So that's a disclosure I'm giving you. But Aditya, one more question I have. Just let's pull up the Nifty Bank chart first to give you the sense, how recovery has happened in the Nifty Bank. Let's show the intraday chart. That's near its day's high levels, 200 points up, trading comfortably above the 58,150 levels. And now we are seeing some strength coming in the private banking space also. Now, private banks or PSU banks, where do you think the risk-reward ratio is good? And it can be a positional call also. Aditya, could you shed some light on that?
Definitely, Shah. In fact, I think a matter of time before Bank Nifty hits a new all-time high, and we should be breaching 59,000 mark on the Bank Nifty. If that has to happen, definitely private sector banks have to chip in and perform, and especially your large cap private sector banks, which have been little laggard so far. So my sense is I would definitely look at some of these large cap banks, names like ICICI Bank, Axis Bank, HDFC Bank. All of them look interesting to me, and especially in that pecking order, I think ICICI Bank is something which has underperformed big time and now has enough room on the upside to test levels of 1450 to 1500 with a good support on the downside at 1300. Axis Bank is also something which looks quite interesting to me and can be looked at current levels, and on the upside you can see levels of 1320 back again. If you have to take an exposure to PSU banks, definitely SBI is something that is at the top of the recommendation list. Post number stock did see some bit of an up move, and then I think some bit of a consolidation is going on. If the stock corrects close to about 930, 920 odd levels, it will be a good idea to look at SBI as well. But as of now, I think these private sector banks, and especially the large cap ones, are ones that I would pick and add them in my portfolio and look for a breakout in these stocks, because for me, Bank Nifty could test beyond 59,000 in the coming times.
Okay, all right. So that's the view with regards to where the Bank Nifty is concerned. But moving on and speaking about small cap buzzers, Anushi joins us with what's buzzing in the small cap space. Anushi?
Quite a couple of small cap stocks in radar today, and of course the main peg remains the second quarter results is what we are seeing. Now for all of these counters, if you just pull up the volume data, CMEC and Bliss GVS Pharma stand out about 34 times to 13 times is the kind of volumes that we are looking at compared to its 30-day average. In fact, Go Fashion is another stock which is in focus on the back of its second quarter results as well, wherein the stocks are about a 6-7% of a revenue growth, while EBITDA is about a 5% of an uptick and PAT is about a 7% of a growth. In terms of the key operational metrics also, if we just look at the average selling price, that stood at about 792. This is for the first half that we are looking at. Coming to CMEC now, a muted set of numbers is what we are seeing. Revenue impacted due to dry dock in CMEC and forex loss as well. EBITDA also dragged due to increase in manpower cost, so some bit of an impact there as well. In fact, margins, if we see, there's an anomaly that we are seeing. A huge contraction is what we are looking at in terms of where CMEX numbers are concerned. So that's another stock on our radar. Apart from that, Biz GVS Pharma, here the volumes were around 13 times compared to its 30-day average. Here, if you look at the numbers, 12% is the kind of growth that we saw in terms of revenue, while margins contracted to 13% versus 19%. Other income, however, aided profit, hence we are looking at a 12% of an uptick in terms of net profit despite the contraction in margins. However, margins contracted due to increase in other expenses. So these are the three stocks in the small cap space that are buzzing in trade today.
Thank you so much for bringing us those details. Aditya, quickly on the charts, any of these counters looking attractive to you? You have Go Fashion, CMEC as well as Bliss GVS Pharma.
So for as far as Go Fashion is concerned, I would give it a pass because it's early days for the stock. Stock has constantly been on the corrective phase. Bliss GVS is something which looks interesting to me and can stand out. So at current levels, maybe I'll be a buyer here, but one needs to be a little cautious here because stock is usually volatile. On the downside, 140 is a good support area. On the upside, can test levels of 180 to about 200. So buy a positional trade here and look for a target of 180 to 200 with a stop loss on the downside, close to about 145, 140.
Right. Aditya, what would be your BTST trades?
So Sharad, I've got a BDST buy recommendation on Dabur. Looks quite an interesting chart setup for me. At current levels, I'll be a buyer here for a target of 540 on the upside, and on the downside, look for a target of stop loss of 510 and a target of 540. Looks like a good trade to take within the FMCG space.
Okay, all right. So that's the view with regards to where the BTSE trades are concerned. But let's turn focus to the lending space. Today on Profit Intelligence, we put the spotlight on Bajaj Finance, and their latest commentary has put the spotlight on MSME exposure, with the company signaling a cautious stance. What could this mean for banks and NBFCs with higher SME lending portfolios? Let's bring in Vansh to give us all that analysis.
Well, thank you for that, Mahima. In fact, if we look at the Bajaj Finance commentary, we saw they revised their guidance of AUM from that 24 to 25% mark to that 22 to 23% AUM growth. Now, this was on the back of the slowdown coming in from the Bajaj housing book as well. But what's interesting was the MSME, the outlook on the MSME segment. Now, they have reduced their exposure on the MSME segment by 25%, and they have guided for a modest 10 to 12% growth in the MSME segment for FY26 as well. Now, this leads to a caution across the SME and MSME lending space as well. If you look at the MSME now, there has been indications of potential slowdown in the higher risk credit portfolios as well. If we look at the implications for NBFCs and banks with higher SME exposure, we have banks which can see rising delinquencies across the NBFC pack. In fact, if you look at the preference now, the preference for NBFCs with MSME exposure can be reduced going forward, and the higher risk SME lenders may see temporary valuation corrections as well. If you look at some of the names with high MSME exposure, we have Bandhan Bank contributing 16% of AUM as of Q2 FY26 from the MSME segment. We have Capri Global 21% of the AUM, and lastly we have City Union Bank where 40% of advances come from MSME segment as of Q2 FY26 as well. So this is how the overall picture is panning out for the entire NBFC pack.
Well, thank you very much for that, Vansh. The entire NBFC space is buzzing, but it's a negative impact. Sudeep sir, I want to get you on board on this. This SME exposure that has spooked the street as well. Bandhan Bank, City Union Bank also has a sizable exposure. What's your view in this space? Is the NBFC space still out of the woods, or only certain segments like the CV segment as showing some green shoots? So what are your views overall in the NBFC space, especially on the stress part?
Well, I think, how things started, the entire unsecured book of the lenders was a question mark. Things started getting from bad to worse as far as microfinance exposure is concerned. And that started about a year plus back. And that has been, a continuous story. Quarter on quarter, we've been seeing huge write-offs from the microfinance lenders, as well as the banks having microfinance exposure, whether it's the IDFC Bank or it's a IndusInd Bank or even RBL, Bandhan Bank. All of them have been taking a huge hit on the microfinance book. Now, this challenge on the microfinance, which is unsecured lending, also has spilled over into MSME book, which is unsecured. And that is creating this concern, which is now emerging. And, entities like Bajaj Finance have that exposure. So does Bandhan, and so does some of the other lenders. Now, the whole issue is there has been a credit squeeze as well on the unsecured loan book from a overall system point of view, and fresh lending to this segment has reduced significantly. Now, this has led to a vicious cycle whereby this entire unsecured loan book is getting squeezed from all the sides, and there is a problem today. I'm not saying this problem will continue for eternity, but as things stand today, there is a challenge, and it's better to be careful.
Okay, all right. The other counter that's remained in focus for second day in a row is Indigo Paints. Let's try to pull that up. 6% of an uptick is what we're seeing in trade today, and has significantly gained from its day's low point as well. Look at that chart. Yesterday also it was doing very well in trade. Aditya, I'll come to you on this one. Anything that's indicative on the charts right now? Because it's not like this counter has done very well in the past. It's the past 2 days that it's seen a significant rally.
So, Mahima, if you take a look at the chart, definitely stock has been in a corrective phase. It's just last these 2-3 days when the stock has actually seen some kind of an uptake on the back of good volumes. And at current levels, maybe I'll give it a pass, wait for the stock to actually sustain above 1230, 1240. Once it manages to sustain above 1240, then maybe I would look to go long on the stock, because we've already seen a rally from 1000 odd levels to 1250 now. Once it crosses 1250 now, as a fresh long position, I would look at for a target of 1450. Otherwise, I would look at a Berger Pain, which is a better looking chart setup and offers a better risk to reward as well.
Sudeep, any view on Britannia per se? I mean, today, of course, the stock has tanked, of course, recovered from its day's low point. And this is on account of the management change that we've been talking about. Varun Berry exiting suddenly after, indicating in his last con call saying that, he will be felicitating a smooth transition once Rakshit Hargave takes over. But overall, your view with regards to how this is developed, because in the past 9 odd months, we've seen a lot of changes, not just 9 months, almost a year now, we've seen a lot of changes happening in this FMCG space.
No, you're absolutely right. I think today's reaction is on the back of, unexpected sudden exit of Mr. Varun Berry. The exit was known, but the way in which the exit happened was little unprecedented, and the market didn't take it nicely. And that's why the correction which we saw today. But overall, I think the entire FMCG space has been under significant pressure for a very long time. Of course, The green shoots are visible now, and we believe that probably Q3 and Q4 we will see much better performance from the overall the entire FMCG sector, including players like Britannia and HUL and Dabur. So I think companies having significant rural exposure and significant exposure to the lower segment of consumption population will do well in Q3 and Q4 because disposable income is going up, and a little bit of benefit will percolate down from the GST rationalization as well.
Thank you very much, Sudeep and Aditya, for giving you both technical and fundamental perspectives. But moving on to the closing, it's a very strong closing for the markets coming in. The markets have actually sustained their recovery, and the number which I'm looking at is 25,700. If it has a strong closing above that, we can expect further up moves. So that's what technical analysts say. Nifty Bank also supported positively by both the private banks, aiding ICICI Bank as well as HDFC Bank. Let's pull up the overall heat map for the Nifty index, and we see a sea of green happening in the closing session. Only the Bajaj twins have been on the downtick, but you see right from Interglobe Aviation, M&M, most of the stocks have given a strong recovery. That's why we are seeing the wall, mostly it is in the green. Let's see which sectors have done well. And largely today we have seen most of the sectoral indices in the green, especially the Nifty India Defence Index. Very strong up move coming in. IT is showing strength for the last two trading sessions. And over here also, not much changes, a little bit of profit booking in the PSU counters, but that's okay, not much of a technical moves or up moves coming in. But the advanced decline ratio, earlier Mahima was also talking about it, and now you see how it has turned and it has narrowed down right from the beginning of the session. So largely even Stevens when we talk about the bulls versus bears. But now let's pull out how the Nifty Midcap Index has performed. This index itself, the Nifty Midcap Index, that has done well. It's up 0.5%, and it has also augured well with how the Sensex and the Nifty indices were recovering. But small cap index for the second straight day has not participated in the recovery, and it is still down. That means we are waiting for flows to come in these counters as well. Moving on, let's see the BSE contribution, how things have actually panned out. And largely you see the mid-cap names. This includes Vodafone Idea, strong commentary after the earnings. Bharat Forge, a flip in the earnings, it's out 6% up. Even Hind Copper, we can see a strong impact in the earnings coming. In the losers side, we are having Bajaj twins, as earlier we had stated. Balaji Mines, not much happening in the chemical counters. And also, Restaurants Brands Asia also making it to the list, where we saw the list of losers being prevalent. But the focus still remains is on the earnings season. What to watch out for post earnings. And tomorrow is the Fed bar speech in the US markets, and Street is of course expecting that the US government shutdown overhang also goes away, and the interim dividend announcement, that's something which the Street will be looking out for these counters. And lastly, the demerger for all cargo logistics, that is also pretty important. But earnings post-market hours, looking at RVNL and National Fertilizers, and also Tata Power, that is something which we'll be looking out for in that Mundra related commentary. Also Ashok Leyland, Asian Paints and Cochin Shipyard, larger earnings to track, where we will see the action in the markets taking place. HAL and Tata Steel also is something where commentary and the growth outlook is something which we will be tracking. So these are the entire earnings setup also for tomorrow. And lastly, the IPO opening, that is Tenneco Clean Air India. So primary market action is also filled, and the listing of Grow, Billion Brains Garage Ventures is the company's name. So this would show that a primary market action is also strong. So a lot of news flow would be there, and that's it for India market close at NDTV Profit. And up next, Himangshi brings you Market Express.
Namaste, India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahogda, and let's get straight into the show. But first up, let's see how the markets have fared today. So, benchmarks have ended the day off day's lowest points, with Nifty managing to shut shop above 25,700 levels. Sensex has also jumped more than 300 points. The advanced decline ratio was tilted in favor of the declines. Now looking at the sectors, so most of the sectors have ended the day in green. Defense, IT and auto were the top gainers. Meanwhile, PSU Bank, Realty and Finance were on the back foot. Let's look at some earnings now. So Vodafone Idea second quarter results have come in line with the expectations. The telco's net debt rises slightly up to about 1.96 lakh crore rupees from 1.94 lakh crore rupees in the previous quarter, while its subscriber base continues to fall. ARPU also edges higher, helped by an additional day in the quarter. The company remains in the red for the 31st straight quarter, with cumulative losses losses now crossing 2.15 lakh crore rupees. Looking at more earnings, Syrma SGS reports a sharp jump in revenue after 2 straight quarters of decline, and margins have expanded to 10% now, both year-on-year and sequentially. So while the net profit surges 78% to 64 crore rupees, Syrma SGS announces the acquisition of a 60% stake in Elcom Integrated for about 235 crore rupees, with the remaining stake to be picked up in phases over the next 3 years. The move marks its entry into the defense and maritime electronic space. In fact, Morgan Stanley maintains an equal weight rating on Syrma SGS with a target price of 712 rupees. So the brokerage says that the company's second quarter performance is a strong beat, and this is led by improved margins. Adjusted profit after tax comes in 17% above the estimates, and this is driven by better revenue, stronger EBITDA margins, and also lower interest costs. Solar Vineyards delivers muted performance this quarter. The company's own brand segment takes a hit due to disruptions in Telangana through Haryana, Uttar Pradesh and Rajasthan, seeing strong double-digit growth. So sales through the canteen stores department, which caters to defense personnel, more than double in the quarter, offering some support to the overall numbers. Solar remains focused on expanding premium wine sales across the key markets. Balaji Ameen posts a muted performance this quarter. Revenue and profit sees a slight decline while margins remain largely steady. The Ameen segment posts lower earnings, and also the hotel division faces a sharp fall. The company continues to grapple with margin pressures amid soft demand, keeping overall growth subdued. Subros faces a slowdown this quarter, with growth hurt by weak industry demand and also higher costs. The passenger vehicle segment sees mixed trends, though September sales show a modest recovery there. Margins are under pressure due to rising commodity prices. And on the positive side, Subros receives incentives from Gujarat and sees growth in the hybrid car components, strengthening its position as a leading manufacturer. The company also expects its trucks business to grow in the coming year, adding to the overall momentum. Staying with the earnings, electric scooter major Ather Energy showing clear signs of accelerating towards profitability. The company has posted a significant improvement in its financial health for the second quarter. So let's talk about the revenue first. That has jumped sharply by 54% year over year. Now, the bottom line is, looking much healthier, with the company successfully managing to narrow its net loss. So this financial improvement is largely driven by better cost efficiency and also improved margins, which is a great sign for operational stability. Also, Ather is looking at future growth, having commenced commercial operations at its new manufacturing plant in Maharashtra. Discount fashion retail Bazaar Style is reporting a stellar Q2 turnaround, posting massive growth across the board on the back of aggressive expansion and also tight operational control. The company has announced a powerful 71% surge in revenue, but the biggest story is the profitability. So Bazaar Style has flipped its net results, moving from a loss last year to a net profit of 51.5 crore rupees in the second quarter. So this dramatic shift was powered by efficiency, with EBITDA margins nearly doubling to 13%. The growth engines are firing. The retailer expanded its physical presence, increasing its store count by 36% to 250 outlets, and also drove robust organic demand. And this is reporting 10% same-store sales growth as well. FMCG player Bajaj Consumer is posting robust Q2 numbers, with net profit climbing nearly 33% on the back of impressive cost management. So the company's bottom line has gotten a strong boost from easing commodity prices. So this is leading to a significant gross margin expansion of 690 basis points, which is huge. And in fact, raw material costs were down over 3% year on year. Top line growth was also healthy, with revenue rising 13.4%. So this was driven by the domestic business, which saw double-digit value growth. Operational efficiency was key. Bajaj's EBITDA has surged by over 46%, and this is pushing the operating margin up from 14% to 18%. Sugar and pharmaceutical giant Eat Parry is reporting a surprisingly sweet second quarter, delivering substantial growth across its financials. So the company has seen a near 39% jump in its net profit and climbing to 424 crore rupees compared to 306 crore in the same period last year. So this stellar bottom line performance was backed by strong demand, with consolidated revenue surging by nearly 25% to cross the 11,600 crore mark. And operationally, if we talk about, so Eat Parry remained highly efficient. EBITDA has grown over 23% to settle at almost 1,200 crore rupees. And crucially, the operating margin held steady at around 10.3%. And this is demonstrating the company's ability to manage its cost structure while rapidly, scaling up the sales. Next up, we have wine major Sula Vineyards, which has reported surprisingly muted second quarter, with its bottom line being severely strained. So the company has seen its consolidated net profit plunge by almost 58%, settling at just 6 crore rupees for this quarter. So this came as operational efficiency took a hit, with EBITDA margin shrinking from over 25% down to 19.4%. Revenue has remained largely flat at 131 crore rupees. Management attributes the substantial drop primarily to a regulatory disruption impacting the performance of its own brands in Telangana. However, there were silver linings. Sula reported strong regional momentum, with states like Haryana, Uttar Pradesh and Rajasthan recording double-digit growth. Also, the sales through the CST channel, which caters to defense personnel, impressively more than doubled during this quarter. Next up, we have specialty chemicals maker Balaji Amines, which is reporting muted financial numbers for this quarter, reflecting a difficult environment for the chemical sector. The company's performance was virtually flat, with consolidated revenue seeing a marginal dip of about 1.8% to settle at 341 crore rupees. Operating profit has also seen a little movement there, with EBITDA slightly declining by just over 1%. So this overall sluggishness has significantly impacted the bottom line. Net profit has declined by nearly 16% year-on-year, coming in at 34.6 crore rupees, which is nearly 35 crore rupees. And digging into the segments, the core amines division saw its EBITDA. And now let's also look at the auto giants Mahindra and Mahindra and Ashok Leyland. Both have hit record highs, rallying up to 58% from their April lows. The surge comes on the back of strong demand across commercial and passenger vehicle segments, and this is supported by improving margins and also steady volume growth. Analysts say that the momentum in both the stocks could actually continue, driven by a robust order pipeline and festive season tailwinds, underscoring renewed investor confidence in India's auto space. Next up, we have SoftBank Group, which has reported a net profit of around 1.3 lakh crore rupees for the September quarter, and this has more than doubled, last year's earnings. So the jump was fueled by strong valuation gains from its OpenAI investment, as the Vision Fund booked gains of about 18 lakh crore rupees, with 11 lakh crore coming from the OpenAI alone. So analysts had expected profits of roughly 1 lakh crore rupees, making the beat substantial. Now, the results highlight that the boom in the AI-driven valuations, even as experts caution about the possible AI bubble. Meanwhile, since we are talking about SoftBank, so SoftBank Group has also sold its entire stake in Nvidia Corporation, raising around $5.8 billion in a surprise move aimed at freeing up funds for its artificial intelligence push. So the Tokyo-based investment giant also announced a 4-for-1 stock split effective January 1st. Now, the sale signals SoftBank's intent to reallocate the capital towards major AI bets like OpenAI and other tech ventures. So market reaction was muted, but analysts say that the deal shows SoftBank's strategic pivot as it scales into a new technology frontiers. Sony has raised its operating profit forecast for the year ending March 2026 by 8% to 1.43 trillion yen, citing a smaller than expected impact from the US tariffs and also strength of its entertainment and chips businesses. Now, operating profit in the July-September quarter has climbed 10% to 429 billion yen after its music unit, which includes anime and chips businesses, recorded higher sales. Now, Sony has cited that the success of animated movie demon slayer. So what stands out this quarter, put simply, is the Japanese conglomerate that was once best known for household electronics, but has become an entertainment powerhouse and is also banking on the growth of anime. Here's Adani Group has announced a massive 1,126 megawatt battery energy storage system at the Khavda site in Gujarat, scheduled for commissioning by March 2026. So the project is set to host over 700 containerized BESS units, with this will provide about 3 hours of storage capacity to enhance the grid stability, manage peak demand, and also reduce renewable energy curtailment. Now, this move marks a bold step into the large-scale energy storage, supporting India's clean energy transition and positioning Khavda as a global-scale renewable and storage hub. Now, looking at the precious metals, so there has been a focus in the gold prices extending gains to their highest in nearly 3 weeks, supported by expectations of a potential US government reopening, could actually restart the flow of US economic data ahead of an expected Federal Reserve rate cut next month. Next up, we have PhysicsWallah, the rapidly growing Indian Edtech company, which has reached a valuation of around 31,000 crore rupees following its latest funding round. The firm began with a modest seed investment of just 30,000 and has scaled sharply through affordable, high-quality online and offline coaching for students. Now, this is backed by major venture capital firms. PhysicsWallah continues building out its offline centers while expanding into new exam segments. So the valuation surge reflects strong investor confidence in India's education technology boom. On to some national news now. Maharashtra government's new ordinance, the Maharashtra Public Trust, changes how public trust and operate in the state. So it limits the number of live trustees to 1/4 of any board and requires fixed-term trustees to step down unless unanimously reappointed. Now, this may force Tata Trust to review the recent lifetime appointments made after September 2025. So trusts that acted on such appointments might now have to revisit those decisions amid ongoing internal governance tensions. Viewers, the nation is reacting with profound shock and sadness to the horrific incident that rocked Delhi last night, and now we have firm response from the highest level. Prime Minister Modi today addressed the tragedy, stating that he was in constant contact with investigating agencies throughout the night. So, in a strong message, the Prime Minister has assured the affected families that the entire nation stands with them in their grief. Most significantly, the Prime Minister has vowed a full, unsparing investigation. He has declared that agencies will get to the bottom of this conspiracy and that those behind this will not be spared. So PM Modi's final promise is clear. All those responsible will be brought to justice. Now, we will continue to track the latest developments as the investigation unfolds. And reports suggest that the probe into the blast near Delhi's Red Fort has been handed over to the National Investigation Agency. Union Home Minister Amit Shah has chaired a high-level security review meeting in the wake of the blast. So Mr. Shah had earlier said that all the possibilities are being explored, and through an investigation, will be conducted taking all the options into account. Let's look at Bihar's phase 2. So voter enthusiasm has continued, the mark of the second and final phase of Bihar Assembly elections. Electoral fortunes of 1,302 candidates, including over half a dozen ministers in the Nitish Kumar government, will be sealed today, with 3.7 crore voters eligible to exercise their franchise across 122 assembly segments. Now, over half of the electorate is aged between 30 and 60 years. So voter turnout has neared the halfway mark by 1 p.m. Meanwhile, state's police have intensified security measures by sealing the nearly 700-kilometer international border with Nepal for 72 hours. With the GRAP 3 restrictions coming into effect amid rising pollution levels, Delhi schools have reintroduced the hybrid mode of learning for students up to class 5. Authorities have directed schools to conduct online and offline classes alternately to ensure safety. So this move aims to minimize young children's exposure to poor air quality as pollution levels continue to remain in the severe category across the capital. Let's look at some global news now. The US Senate has passed a crucial funding bill that could actually bring the longest government shutdown in history to an end within days. So the bill has passed in a 60-40 vote late on Monday, with nearly all the Republicans joining 8 Democrats who splintered from the party to approve it. The deal funds the government until the end of January. Now, the House of Representatives will now have to pass the bill before President Donald Trump can sign into the effect. Now, Trump has signaled that he would be willing to do so earlier. Now, a car explosion outside a district court in Islamabad has left at least 5 people dead and several others injured. The blast triggered panic in the area. Security forces and emergency teams rushed to the scene. Authorities have cordoned off the site and launched an investigation into what caused the explosion. So the incident has raised fresh concerns over security in Pakistan's capital. Viewers, Canadian-Hungarian-British writer David Soloy has won the Booker Prize for Fiction for his acclaimed novel Flesh. So the book, praised for its powerful storytelling and emotional depth, stood out among a strong shortlist. So this marks a major milestone in Soloy's literary career, earning him one of the most prestigious honors in global literature. On to some sports news now. Football icon Lionel Messi has sent out a heartfelt message after making a surprise visit to Barcelona's Camp Nou. Now, returning to the stadium where his legendary career began, Messi has shared his emotions on social media, thanking fans for their endless love and support. So the visit has stirred nostalgia among Barcelona faithful, who continue to celebrate Messi as one of the club's greatest ever players. Drama for Spain and Barcelona. Lamine Yamal was briefly recalled to the national squad only for the call-up to be withdrawn after Barca reported a fresh injury concern. The teenager had just returned to training, but medical tests confirmed that he wasn't fully fit. Spain's coaching staff decided not to risk him, prioritizing his recovery as Barcelona monitor his progress closely. Team India batter Shreyas Iyer remains doubtful for the upcoming ODI series against South Africa as he continues to recover from a freak injury. Now, medical staff are monitoring his progress closely and a final call on his availability will be taken soon. The team management is keen not to rush his return, prioritizing his full fitness ahead of a busy international schedule. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
Namaste, India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके
Benchmarks end in the green for the second consecutive session as the market remains in recovery mode. Nifty finishes close to 25,700 and Sensex gains more than 330 points. Most sectors end higher with IT as a top gainer. Maharashtra government passes Maharashtra Public Trust Amendment Ordinance 2025. Sources say the ordinance will have direct implication on Tata Trust Board structure and impact the resolution passed post the 1st of September. Physics Wala IPO subscribed 6% so far on the first day of subscription. MB Photos issue sees 7% subscription, while Pine Labs IPO subscribed 2.44 times on its final day. Equity mutual fund inflows declined by 19% in October amid high festive spending. SIPs though see rise to record inflow of over 29,520 crore rupees. National Investigation Agency takes over probe into Delhi blast. Investigators find additional 50 to 60 kilograms of explosives in Faridabad. Arrest 2 more suspects. Bihar votes in the second phase of assembly elections, records voter turnout of 60.4% till 3 p.m. with polling being held in more than 45,000 centres. West Champaran, East Champaran, Sitamarhi, Madhubani are the key constituencies. Grab 3 imposed in Delhi. The AQI breaches the 400 mark, falling into severe category, putting a ban non-essential construction and demolition activities. Schools up to class 5 to remain closed and classes are shifted online. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Mallika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's begin with checking how the markets fared today first. Benchmark indices ended higher with Nifty closing near 25,700 mark. Meanwhile, Sensex gained over 0.4%, ending close to 83,900 levels. Sectorally speaking, Nifty Pharma, Media and PSU Bank and consumer durables dragged the markets lower, whereas on the other hand, IT, FMCG, metal and oil and gas closed in the green, making it a mixed day for the broader market. But let's now go across to my colleague Anushi Vakharia for a detailed market roundup of the day.
Well, markets ended in green today. This is with Nifty near the levels of 25,650 is what we are looking at now. That's an important mark that we are seeing. Of course, gains in the Nifty 50 if we are seeing were led by Interglobe Aviation as well as M&M. In terms of where the Nifty mid-cap indices are headed, we are looking at an uptick of around 0.5% by the end of the session. Gains in the Nifty mid-cap were led by Vodafone Idea. More focused in terms of where the con call was concerned in the last half hour of trade, along with Bharat also, which was buzzing on the back of its results. Coming to the small cap 250, that ended in red, however, with Balaji Mines and Electra Green Tech falling the most. Talking about the sectoral picture, it was a mixed picture that we're looking at. While defense, we saw about a 2% of an uptick. A lot of these counters were buzzing. Nifty IT also emerged as one of the top sectoral gainers. Persistent Systems and Coforge gained the most in the pack that we are seeing. Coming to Nifty Oil and Gas, they also continued to gain for a third consecutive session as well. But what was not working out so well is Nifty Realty, which fell for a fifth consecutive session. So some bit of pressure over there. In terms of Nifty Auto, we saw it gaining for a fourth day in a row, while Nifty Bank and Metal gained for a third day in a row as well. But what's leading or continues to remain under pressure is Nifty FMCG. 7-day of losing streak is what we are looking at. In fact, even Nifty Media, we are looking at about a 5-day of fall. So this is the overall picture that we are seeing in terms of where the broader market, benchmark indices and the sectoral indices have performed in trade today.
Thanks for that summary, Anushi. But moving on, viewers, Emkay Global CEO of Institutional Equities, Nirav Seth, believes that while oil and gas and consumer discretionary stocks have performed well, the market currently lacks momentum in large sectors like banks and the information technology space. And that's where the challenge actually lies. He points out that earnings growth in key sectors remains in single digits, which has limited broad-based market performance. Listen in.
I think consumer discretionary has done well, oil and gas has done well, and those are sectors that have done well, right? But you clearly don't have the kind of momentum that you need either for banks or for IT, and these are big sectors. I'm talking about Nifty, and that's the problem, right? So if your earnings for the key sectors are growing at about single digit or high single digit, there is only so much momentum that you can have in the narrow market, right? But I still feel constructive on the broader market. So I've got a different view over there. And I've been holding that view for some time, that India is largely a story of diversification away from this large cap concentration. Till the time that you've got new companies coming in, you had Lenskart and platform companies, eventually they'll become big enough and be a part of the Nifty and take the earnings momentum forward.
While that was Nirav Seth's comment on the markets, a major development in Maharashtra may have implications for some of India's oldest and most influential charitable bodies. The state government has passed an ordinance that changes how public trusts are structured, and this could directly affect the Tata Trust. To understand the story in greater detail, let's go across to my colleague Nisha Podar. She's the executive editor of corporate stories at NDTV Profit.
Thanks so much for that. Yes, this has come as a twist in the tail in the Tata Trust saga, which we thought after Meli Mistry walking away is over. Now, what has happened is, dated September 1st, effective from September 1st, the Maharashtra government has passed an ordinance amending the Maharashtra Public Trusts Ordinance, and that has made two important changes that could have an implication on the Tata Trust's board structure, composition, and also whatever decisions have been taken in the recent past after September 1st. So the first change is that the ordinance limits the number of trustees to 1/4 who can be life trustees on the board of any public trust, which means the Tata Trusts, which had earlier passed a resolution in October of 2024 saying that all the trustees at the time of renewal will become life trustees, that stands to probably go through a rethink to comply with this particular legal ordinance which comes into effect from September 1st. And in accordance with that resolution of Tata Trusts, they had gone ahead with renewal. So in the month of October, there was Venu Srinivasan who was renewed and given life trusteeship, and Meli Mistry was ousted from Tata Trust. Now the second ordinance impact and the change is that the renewal of trustees or appointments will have to be unanimous as per this particular ordinance. That also means that while after 1st September, any changes made to Tata Trust board composition, if it comes for reconsideration, will have to comply with the changes of September 1st. So here the big question is whether or not Venu Srinivasan's renewal will put again for voting. And second important aspect is that Meli Mistry, who had filed a caveat with the Charity Commissioner to get a hearing before his renewal, his removal from Tata Trust is really sanctioned by Charity Commissioner, whether or not that will be seen in light of this particular ordinance. I have with me Supreme Court lawyer H.P. Ranina joining in to give us some opinion and details on how to read this particular legality. Mr. Ranina, always a pleasure to have you on NDTV Profit. Now, my first question, what sets to change when it comes to Tata Trusts at the present moment because of this particular ordinance?
Nisha, thank you for having me on the show. But I think this is a path-breaking amendment which has been made by the Maharashtra government and has been made with effect from 1st September 2025. It has come into effect immediately on that day. Now, obviously, many of us were not aware of this, but this certainly will have a tremendous impact on what has happened in recent weeks and days in the Tata Trust. What it says is that when a trustee who was for a particular tenure or who was appointed for life, he retires, then he ceases to be a trustee immediately unless and until he is reappointed. And that reappointment has to be done unanimously. Now, normally what happens is in a trust that a trustee has three options. One is to approve the resolution reappointing him. Second is to vote against the resolution. And third is to abstain from voting. But a person is reappointed under this particular ordinance only if all the trustees unanimously agree. And therefore, what has happened, you mentioned about one Mr. Venu Srinivasan who retired on, I think, in the last week of October this year, 2025, before Meli Mistry's appointment came up. When he retired, he was reappointed for life under the earlier resolution that had passed in 2024, 17 October 2024, if I remember correctly. So that resolution now has no meaning. That 17th October 2024 resolution has no meaning in view of this ordinance. Now the law is very clear. Ordinance is the law of the land. Of course, it will have to be approved by the Legislative Assembly. But until that is done, it is the law of the land. And therefore, under this law, the resolution appointing Mr. Venu Srinivasan for life is null and void. And now they will have to bring a meeting and have a meeting whereby all the trustees, including Mr. Meli Mistry, because this resolution was due on that particular date when Meli Mistry was still the trustee and not removed. Therefore, a new resolution will have to be passed. And if all the trustees, including Mr. Meli Mistry, unanimously agree to reappoint Mr. Venu Srinivasan, then he can be appointed for a period of 5 years.
All right, so 5 years is very critical here to note because the October 2024 resolution says that you, on your renewal, you will be life trustee. And this particular ordinance says only 1/4 of the entire board can have perennial trusteeship.
Provided earlier they had that clause for perpetual trusteeship. They were earlier trustee, had that clause. So I don't know whether Tata Trust had that clause for perpetual trusteeship, but assuming they did not have that clause.
All right.
It will only be for 5 years at a time.
All right, Mr. Ranina, so that this fight looks like it's not over. There is a twist in this Tata Trust saga. Thank you so much for joining us right here. And I hand it back to my colleague, Malika.
Right, Nisha, thanks for that. And as HP Ranina said, this could be a path-breaking development that has come into place. And of course, all eyes will be on what changes at the board of Tata Trust after this ordinance. But moving on, Transformers and Rectifiers has responded to the World Bank's allegations, saying the company was surprised to receive the communication. Speaking exclusively to NDTV Profit, Group CFO Chanchal S. Rajora said the company was part of a larger $24 million project and was taken aback by the allegations, which he described as linked to border-level order issues. Rajora added that the company is reviewing the World Bank's mechanism to challenge the charges and will present its position in due course. Listen in.
We were also surprised when we got this letter on 4th of November from World Bank. Basically, in 2020, we had done a project with Nigeria, right? And we were part of basically a bigger project which was funded by the World Bank, and our contribution was around $24 million, right? And we had supplied all the transformers, and we have received the payment also, right? And we were actually taken aback with this, why this has come up into to us, right? There were some issues with this order on a border level, and then World Bank has last wrote us in 2023 that there are certain changes we wanted to see that is happening in the company or not regarding the corporate practice and us, and we told them anytime you are welcome if you want to see anything. Well, they did it this as per our information, they did it with all the companies which were involved in this particular project, and after that we never heard anything about from them. So suddenly this has come up, so we are taking up with the World Bank very strongly that why this has come up to us.
No, but the allegation is alleged corruption and fraud. So corporate governance is a different thing. It's not about issues with the order. The allegation of corruption and fraud. Where do you think that would have come from?
No, we don't know, because we were not at all involved in any kind of these things, and we are very, very clear from corporate practices in our side that we don't tolerate these kind of things if anything comes up.
What is the mechanism you have to challenge this?
You know, we have already mechanisms in place, and we are taking it up on that, and at every level there are the controls in our companies in place. Look, understand, if the processes and the governance is not in the company, we cannot be the first company in this country to declare the results in 8 days' time, which takes a great amount of energy and great amount of work involved into that.
But specifically on this Nigeria project, you said that it's from 2020. When was it completed?
Look, this project was completed in 2022. Okay. Right? We got the 90% payments of the entire transactions in 2022, and last 3 transformers which we sent them, they were toppled in the port. So we have to basically make the new transformers and send them, which we did in 2023-24, right? And the payment of the balance 10% we received in this year in April itself. So, you know, understand one thing, had anything was there related to us or our practices or ethics, World Bank would have not released this payment to us.
And let's put the spotlight on Britannia Industries, as this stock slipped sharply in trade today, ending lower by over 4% after the company saw a significant leadership change. The FMCG major announced that CEO Varun Berry has handed over charge to Natarajan Venkataraman, who will serve as the interim managing director and CEO till December 15th, 2025. From that date, Rakshit Hargave will take over as Britannia's full-time MD and CEO. Hargave, whose appointment was confirmed last week, was earlier the CEO of Birla Opus, the Aditya Birla Group's paint venture, and has held leadership roles at Hindustan Unilever, Jubilant Foodworks, Nestle India, and Tata Motors in the past. Varun Berry, who has been associated with Britannia for over 12 years now, was elevated to the top role earlier this year, steps down as part of this transition now. The leadership change comes as Britannia's board lays out its next phase of growth, aiming to evolve into a global total foods company, as outlined in its note following the November 5th board meeting. And the Adani Group is making a big move into battery energy storage to power India's green future. The group announced a massive 1,126 megawatt project with 3,530 megawatt hours of storage. Now, this will use over 700 battery containers and could potentially become India's largest setup and one of the world's biggest at a single site. And this is all happening at Khavda, their huge renewable energy park. To know more details on this project, let's go across to my colleague Varsha.
Adani Group has announced its entry into battery energy storage system, which is currently the high growth sector where every company is going into. The project will have power capacity of 1,126 megawatt and energy capacity of 3,530 megawatt hour. This will be one of the world's largest single location BESS deployments, and the commissioning is expected by March 2026. This will strengthen India's energy security, and the project will ease peak load, reduce transmission consumption and improve grid reliability, and this will mark a major leap when it comes to India's energy independence. Onto the scaling up of ambitions, if I were to talk about, the group targets 15 gigawatt hour of BESS capacity by FY27. And the long-term plan is to reach 50 gigawatt hour within next 5 years. And this position Adani Group as a global leader in large energy storage system, and which will support India's net zero goal. So overall, group is actually entering into a high growth segment, that is BESS.
Thanks for that, Varsha. And let's now take a look at the latest data from the Association of Mutual Fund of India. October 2024 saw a dip in investments into active equity mutual funds, with net inflows dropping 19% to 24,690 crore from 30,422 crore in the month of September. But on a brighter note, SIP inflows hit a record high of 29,529 crore rupees. But for more details on each of these categories, let's go across to my colleague Alex.
The headline numbers first. On a composite level, the mutual fund industry has seen inflows of over 2.15 lakh crore rupees. And that seems like a very large number, but it's really par for the course, especially when you saw outflows of about 1 lakh crore rupees in the previous month. This is what normally happens at the start and end of a quarter, respectively. October was the start of the quarter, and so you saw substantial inflows in the way of fixed income mutual fund schemes. Outflows is what you saw at the end of the quarter in September. What is more interesting is the SIP flows data, where there is a fresh record high, once again 29,500 crore or thereabouts, and that is robust inflows into the mutual fund space as a whole. What else do you want to pay attention to? In fact, in the month of October, you saw lower inflows into actively managed equity mutual fund schemes pretty much across the board. So if you remove the new fund offers from both October as well as the month of September, then in October you had inflows of close to about 20,000 crore rupees, and that compares with 29,000 crore rupees in the previous month. A large part of those inflows in the month of October have come through in the form of flexi cap funds, which got inflows of close to 9,000 crore rupees. And that is a good sign, because people are gravitating towards the more diversified mutual fund schemes. Both mid-cap as well as small-cap mutual fund schemes actually got pretty robust inflows, but they were lower than what you saw in the previous month. Hybrid mutual fund category as a whole has gotten more inflows than it got in the month of September, and there have continued to be sizable inflows into gold ETFs. In fact, close to 7,800 or 7,740 crore rupees into gold ETFs. It is lower than what you saw in September, but still, that's a very large number. And even the other ETF category has gotten inflows of about 6,200 crore rupees. And this subcategory contains equity as well as silver and certain other ETFs. So that's something to bear in mind. But all told, your takeaway should be that in a wobbly, uncertain environment, there have been inflows. And remember that it was also the festive period. So people put a pause to their investments quite often on account of the higher spends that they might have during the festive season. So really, this is par for the course.
Thanks for that, Alex. And moving on, viewers, voter enthusiasm remained high in the second and final phase of the Bihar Assembly elections, with a strong 60.4% voter turnout recorded by 3 p.m. Polling began at 7 a.m. across 122 key constituencies in 20 districts and will continue till 5 p.m. Meanwhile, in a bid to ensure peaceful and fair polling, security has been stepped up across the state. The Bihar police have sealed the 700-kilometer international border with Nepal for 72 hours as 7 districts voting today share that frontier. Bihar DGP Vinay Kumar confirmed the move, calling it a precautionary measure to prevent cross-border movement and maintain heightened security, especially following the blast incident in New Delhi. My colleague Prabhakar now joins us from NDTV for more details on Bihar elections. Prabhakar, what are you picking up?
So it's a very, very crucial phase, I would say. 122 assembly constituencies going to poll, and this entire region is the Simanchal area, basically the bordering districts of Bihar, which borders not only West Bengal but also Uttar Pradesh and Jharkhand. So all the districts which borders various other states are actually going to pay. These are the peripheral districts, I would say, and this is the phase where the MY combination would be put to test. MY stands for the Muslim and the Yadav combined, which is seen as a conventional vote bank of Mahagathbandhan of RJD in particular. So this particular phase would test, and this will also test the X factor in the play. X factor is with OSC, AIM, which has fielded around 45 candidates, and they have been doing well in these Muslim-dominated seats. So that would also be put to test whether OSC is able to dent into that Muslim vote bank. So politically speaking, a very important phase, very crucial phase, and a very interesting phase, I would say. Also, Prashant Kishore, his Jansuraj is contesting on all the 243 assembly constituencies of Bihar. So how they score here, whether they have been able to make a dent into either NDA or for that matter NDA Alliance vote bank, it is something which the result on the 14th would actually reflect.
Thanks for that, Prabhakar. And moving on, viewers, let's now turn our attention to the blast case in Delhi that took place last night. Firstly, anti-terror agency NIA has taken over the case, in which 9 people have been killed and 20 injured. Umar Mohammed, the key suspect and suicide bomber in this case, is a member of a radical doctors group that coordinated on Telegram and has links to the Jaish-e-Mohammed, a Pakistan-based terror group. Remember, viewers, this group was also responsible for the Pulwama attack. 2 other names have also emerged. One is of Dr. Shaheen Shahid. She was arrested in connection with a massive explosives haul in Faridabad near Delhi. This woman was apparently tasked with setting up Jaish-e-Mohammed's women wing in India. The other suspect is Tariq Ahmad Malik, a 44-year-old man tasked with ensuring the security and safety of a bank in Jammu and Kashmir. He is now accused of being involved in a security breach in the national capital. Meanwhile, investigators have also recovered additional 50 to 60 kilograms of explosives in Faridabad and arrested 2 more suspects. And viewers, on that note, it's the end of this edition of Profit 360. But do stay tuned to this channel as we continue to give you a lot more news and updates. This is Malika Mishra.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf pro-am, the course of champions, the conversation of leaders.
What a stellar lineup we have here. Hello and welcome to KYC. I am Sharad Dubey and you are watching KYC at NDTV Profit, and today the company which would be in focus would be Protein Egov, and likely to actually give you a heads up about this company, why we have actually got this company in our special segment, and there are certain questions which we need to ask. The first one being is, will this depressed margins which we are seeing, there will be a turnaround in the coming quarters or the pressure will still remain there? The second question would be, is the diversification very important going ahead for the company, and will AI help the public stack overall, the digital infra stack which the company claims it is it going to help in the long run? What would be the opportunities for the digital transformation going ahead, especially in emerging economies? When I speak about emerging economies, it's the Asian markets or the African markets, and even the more expansions and acquisitions, since they have a high cash reserve as well. So this is the important questions which we'll be asking. But just to give you a flavor about the company, the overall details. First of all, the company was incorporated in December 1995, an old company, IT-enabled solution companies and e-governance related solutions which the company was offering. Also, let's see what the company actually does. It's the largest issuer of identity, the digital tax identity we call PAN. Interestingly, they have developed citizen-centric e-governance numbers, the solutions coming in, and 21 nationally critical e-governance stacks are there. So we keep on getting newer stacks. Main categories, of course, let's pull up the foundational identity, tax systems and pension systems is something which the company operates in. Digital identity, e-KYC is very important, followed by digital authentication and the e-signature. This is where the company focuses on. But if you look at the PAN business, that is giving the majority of its revenue, you see the company issues fresh PAN cards, also reissues them, and also runs tax information network as well. So you see it's a flywheel coming in the taxation space, and overall they have a market share of 64%. And look at the numbers, that is something to look at, the PAN card numbers, the online PAN verifications, and interestingly they issue 7 to 8 crore PAN card in a year. Let's just see the tax services revenue, how that has panned out, and you see the numbers are humongous for the company's size. It has been on the higher tick, and of course these are the H1 numbers which you are looking at, the slight numbers coming down as well. But let's look at the PAN issuance, how they have panned out. Overall, if you see, that has been on a rising trend, and now you see some kind of a slight
degrowth coming in from FY24 to FY25. But the pension services, that is also something to look at. The revenues are been doing well. The social security and the welfare numbers, that has also been on the stronger side. It's a leading market share of almost 97% coming in. Interestingly, if you look at the identity service, overall we had already discussed, it's basically coming on the online PAN segment. And see this, these are the 4 important services coming in. And lastly, the revenue stream wise, where does the company actually get its revenue from? Most importantly, tax services, followed by pension services, lower names coming in this space. But let's go back to the show. There are important rating parameters which we give for our segment. And based on that, we give the overall rating. It includes income statement, balance sheet, cash flow, return ratios, and also shareholding, street trade valuation, and street coverage. And the first, we could say the first parameter I have picked up is the income statement. Company is also in focus because of its quarterly earnings in the month of September. Those numbers were kind of a decent, kind of a mixed. But let's look at the overall numbers, how they have panned out. They have been doing well. For FY24-25, the growth did stagnate, and the margins, there was a dip coming in each year itself. So that of course raised concerns in my analysis, and the margin trajectory on the lower side. But the Q2 numbers, at least the revenue front, has been decent. So I have given a neutral rating going ahead for Protein Egov. The second parameter is balance sheet. It's very important to track this parameters. And if you see the cash and bank balance, that is something which I have been watching out for. It has been decent. Not so much of deployment has happened. 130 odd crore of balance is still there, and it's a stable balance sheet. Largely it's a debt-free company also. From my side, this will be again a neutral. Nothing very great to see in this balance sheet, but important is the cash flow segment. Cash flow also has 2-3 important components which we track, and this is an asset-light business. We could say a tech business. The operating cash flows have been on the upper side. If you compare the FY25 numbers, if you could just show the cash flow numbers, the PAT numbers, that itself has also done well. That's around roughly 93 odd crore rupees. It's stable, but there's a margin which we generally analysts have, that is called a cash flow conversion to PAT, and that is back on the higher side. That's almost 209 odd percent. So net, I would give a thumbs up when it comes to the cash flows. The fourth trigger is the return ratios. Return ratios is a cause of concern for me. FY29 to FY22, we saw a significant jump in ROC, which is called return on capital employed. But after that, it has been a downhill for the stock. FY23, the number was 13%, then it came to 11%, and now currently it has come down, you could say, almost below the 10% mark. So that becomes a concern for our analysis. And same thing goes for the ROE numbers also, which is called the return on equity numbers. There was a jump till FY20, but after that, it has been on the downtick. So it will be a thumbs down for Protein Egov when it comes to the return ratios when we calculate both ROCE and ROE. Shareholding is very important to track this. Shareholding, if you see the FIs and DIs, they have been actually on a reduction spree. FIs, they held at most 10% stake in March 24, but then see September 25, the recent exchange filing, it's down to below 8% mark, and DIs, that's also significant downtick. Almost 20% of the DI holding has been sold out as well. So the institutions are not giving a thumbs up, and the public shareholders, that has actually increased a lot. It's almost 70% float is held by the public, that is the retail audience. And after that, what happens is the stock, a lot of distribution happens in these stocks if larger hands are not holding these counters, and because of that, we of course saw a downtick coming in the stock prices as well. So from shareholding pattern point of view also, I'm giving a thumbs down. Street cred, not much to happen, because we see large hands are leaving the counter, and you could say retail hand is taking in a 1 month performance, not much, 3% down, 6 month, 32% downtick, and there's a massive share underperformance coming in because of a huge loss of contracts which was earlier announced by the company. So that is something which the street was spooked by. 5-year performance is also nothing much has happened. If you're holding this stock right now also, most likely you are in loss. So it will be very important to actually understand what's the long-term view coming in, and because of that, in our show later on, we will be talking to the management as well as where does this company stand, what happens to the investors or the shareholders or even our viewers going ahead for this counter. So for the street kid segment, I will be giving a big thumbs down in this segment also. Valuations are 7th parameter. So once the prices fall down, valuations do become attractive provided a company has a good growth trajectory going ahead, and this is something which is a rule of thumb we follow as analysts here. And the EPS numbers, look at that, that's well below the 30 times in FY26. The P also 31 times, 27 times. So largely earlier these trades were between 40 to 45 multiple they used to trade with. Now that significant correction has happened, it is, you could say, in line with some large IT companies as well, but we cannot call this company an IT company. It is somewhat like a platform company, but it has a digital public infra angle to it. So that is something which is important. But yes, the government exposure is on a very high basis as well. So for valuations front, since they have become attractive on stock fall, I will give a thumbs up. Let's give the street coverage. Not much coverage, just 5 analysts are there. But none of them surprisingly have a sell rating. I checked the numbers, the buy, there are 4 calls coming in from analysts, while hold, it's only 1 analyst giving that call. So net, there is an average upside, and the Bloomberg average which we took is 36% for the next 12 odd months. That means there is a good chance that the stock might bounce back. That's what the analyst community is feeling. But from my side also, it will be a strong thumbs up. But before going into the entire setup of Protein Egov, let's ask the management also how things pan out. Let's just revise with you the KYC ratings, how things have panned out for Protein Egov. Their numbers had come, of course, a week ago. And we see largely nothing happening in terms of income statement. The Q2 numbers were decent, but on the bottom line, there was some kind of mix. We've given a neutral to it. Same thing follows for balance sheet, but cash flow, that conversion ratio was good. So I've given a thumbs up for it. But then again, the return ratios, that's the main culprit here. Over the last 4 odd years, you're seeing it's continuously falling. ROCs, ROEs getting impacted. So these are the important ratings which we had given. But the same thing goes for shareholding. Institutional participation is down in this counter. Street cred, nothing much returns coming for the shareholders. So the patience is being tested for this counter. That's why this makes the valuations attractive. And even analysts are bullish because of this. So we have given you the entire criteria how this move has happened, and KYC rating, the final rating, not much to offer right now. Company still needs to prove itself to the markets. 4 out of 10 I have given, 4 out of 8 I have given for the KYC segment. Now, of course, there are some positive points, there are some negative points, but we would like to know directly from the horse's mouth, from the management, where does the company stand and how things move ahead. Of course, the first question we will be wondering, we will be actually joined by the MD and CEO, Mr. Suresh Sethi, for Protein Egov. And sir, a strong growth has been seen in the revenue sequentially. What led to this, and what would be the growth guidance for the tax services and central record keeping services going ahead?
So it has been a good quarter for us. We've shown good growth. So there has been a 19% growth quarter on quarter and a 14% growth year on year sequentially. What has really contributed to this has been, strong performance across some of our businesses. CRA clearly again is showing growth. We have a 12% year on year growth clocking in that business. There have been a lot of underlying, tailwinds also. With the pension regulator taking up a lot of initiatives and reforms to open up the ecosystem for better pension penetration. In spite of a healthy growth, we still have a huge headroom in that business. What has been especially strong for us also is the fact that our new businesses, for the first time this quarter, have contributed 12% to our overall top line. And this is the first time we've hit a double digit over there, and we expect this to continue. A long time focus of the company to diversify into new areas. The new areas have been strongly led by our investment into building multiple digital public infrastructure rails across different sectors of the economy, be it insurance and be it other areas like health, agriculture, digital commerce, and that has contributed. Happy to share that we almost have now an order book of 1600 CR. Which is almost double our annual, revenue top line. And that is contributing well. And there has been good contribution again this quarter from our new businesses.
That's pretty interesting. Suresh mentioned these points, but there are some concerns also which the street has regarding your company. The first question is, of course, the margins. However, they have seen a dip and now in higher teens. What led to this margin pressure and what would we be looking going ahead?
So see, margin pressures are coming, one from the fact that there has been a slight change in the revenue mix for this quarter because of the project-led businesses kicking in, which naturally have more project-related margins as compared to the other core businesses. Naturally, we've also set up a subsidiary this last quarter in Dubai. So there have been some expenses to that extent. So there has been a little bit of impact of margin because of these couple of events. But otherwise, we will see better margins as some of the products and SaaS related revenues also start picking in, which is basically the app layer in which we were, contributing and building above the digital layer. To just give the background, as we move into unlocking multiple sectors of the economy, the idea is to again see what can be done in the app layer, where you are talking about consumer and enterprise consumption of those services. And the company has again put investments behind people, teams, technology in building the app layer.
Interesting. Suresh mentioned about the margin growth levers, and this also includes your product and SaaS segments, you could say consumption as well. But company still has sufficient cash balance of around 800 odd crore rupees. Suresh, any kind of deployment or acquisition plans on the anvil?
The share works both ways. One, naturally, it gives us the strength to participate in large projects. And even as I called out the order book earlier, part of the cash gets deployed into funding for these projects, because when you're working in project-led business, there's always a mismatch between investment and return. The other area clearly we've been calling out is looking out at interesting emerging tech opportunities, any businesses which give us either tech edge or they give us market access. So we are looking always on the lookout for those inorganic growth opportunities. And that is where the balance sheet gets used. And last but not the least also is the fact that we've clearly shown intent and have got a few wins in the international markets, which again are largely turnkey projects and which again consume some of these funds. So that's where we are putting the money to good use. And the company continues to remain debt-free with a strong, cash balance with us.
Well, we spoke about international order wins also, but there's a landmark mandate you have won in the domestic markets also. That is the UIDAI landmark mandate coming in, and that's worth 1,370 crore rupees. Now give us some details, give us the flavor. What are the suggested timelines going ahead, and will there be incremental revenue contribution coming from this segment? Please quantify that.
So that's an amazing deal, because first of all, it gives us or places us in a position where Protean becomes the only company today to provide two foundational IDs, be it PAN and now it is Aadhaar. So we are really contributing at the foundational level in building our digital nation. And this mandate, again, is something we've already started working on. We should start seeing our, quarterly revenues coming in the third quarter of this year. But clearly on complete deployment, we see a revenue of 200 crores per annum coming annually in a recurring manner once we have completely, deployed across the mandate we've got for deploying in 188 districts.
That's pretty interesting. The third quarter is something which you'll be looking out for. The bump up will happen from the UIDA order. That's a 1,370 crore order win. And to put in perspective, 1,600 crore is the order book of the company and the revenue is just half of it. So these are the three numbers you should know when you're hearing what the management is stating. But of course, apart from that, speaking of diversification, what's the growth outlook looking like for the new business? What kind of revenue contribution we can expect from this segment going into the future, Suresh?
So definitely, Share, it's a good trajectory for us, and we see this consistently growing, because as we go beyond our core of PAN, pension, and digital identity at the foundational level, we clearly see our diversification into multiple DPIs, playing out. And these are either, largely project-led revenues which come in. As we are unlocking this value, we are also building a very strong suite of BFSI products, which are, be it on the API marketplace front, could be products like enabling CKYC filing for financial institutions, and there are other areas which come in as you unlock value across multiple sectors. And other than that, clearly international remains a focus, and our and our investment in also powering enterprises with infra using our sovereign Protean cloud, be it for our own large scale projects or to enable the industry, are the other areas we see coming in and starting to contribute. So we see this consistent growth and diversification coming through. And we are clearly very glad with the double-digit contribution which has come from these businesses in this quarter itself.
That's pretty interesting. Suresh, AIs have also been the talk of the town, especially with a company which is your digital public stack, as you say. So how will this company benefit from this? Will we see some incremental gains coming in the financials going ahead?
So definitely the answer is yes. If you look at AI, I would say it's become pretty embedded in a lot of our businesses now. So there is an external sort of application of AI, because as we look at the various projects we are working on today, one is in building the core tech itself, whether we take our Sarsai, CKYC revamp, we are looking at Bima Sugam of building the insurance DPI. All these areas today have some element of AI coming in, be it from a deduplication perspective, from a fraud risk management perspective. So these technologies are, AI today is a pretty ambient sort of, technology getting embedded into various workflows and streams. Clearly, the other application of AI is naturally making ourselves more efficient, because as we even, whether it is managing large-scale projects, managing CRM, doing internal digitization of services and driving efficiency over there. So AI for us naturally means that we have to make ourselves digital first internally, and we also have to leverage it for the various businesses that we are bidding for. And otherwise, if we look at the application layer, clearly AI does bring the differentiation factor into a lot of the build we do over there.
Interesting, Suresh. AI is the future, but the present is also there, which is important, especially for the global expansion front. So what are the plans for this segment? Any kind of strategic outlook coming in?
So global markets, Aisha, the focus has always been to look at our core, strength and competence in building digital public infrastructure. So we are clearly looking at economies and countries where, the digital rails are at various stage of early evolution. And even if we see the, the Government of India and PM's push for, supporting the digital infrastructure for the global South, the focus has been clearly looking at Africa, Southeast Asia, Middle East as of now. We have multiple engagements going. I would like to also share that, out of all the exposure and experience we've had in building digital public infrastructure, we are also taking a DPI in a box approach, which technically means that you are looking at a modular playbook of various digital public goods. And to just, explain it further, you're looking at identity as a DPG, you're looking at payments as a DPG, you're looking at verifiable credentials. When you bring all these together, you are able to put together a workflow or a stream where you are able to create enablement for an entire ecosystem, be it from a discovery perspective, fulfillment perspective. And we are actually using this playbook to create faster implementation, which moves into months rather than years, and you can do quick POCs and you can show value on the ground at a very early stage. Currently, as we reported earlier, we've had 2 wins. So in Morocco, we set up an education DPI. We've had a engagement again working in Ethiopia, and we are currently involved in multiple countries at this stage. And in some cases, there are advanced discussions for getting the mandates.
Interesting, Suresh, but my last question would be on the order book front. You had mentioned earlier 1,600 crores is the number. But I want to dig deep into that. Which sectors, this demand is coming in from, and how the inquiry is coming?
So see, when we look at the entire bouquet of services, we see the focus still coming very closely on identity and BFSI-led infrastructure, which is getting generated. So when we look at our, clearly the large components of this order book, there is the CERSAI KYC, which is again a KYC initiative to make the KYC processes more efficient, and therefore again power the entire BFSI sector using that, be it the capital markets or the regulated entities in the financial services sector. The other area is clearly building the insurance DPI. Insurance, I think if we look at it, the four verticals of financial services, insurance, capital markets, pension and banking. So that is going to be a great initiative because it will connect the insurance sector in a very meaningful way and create efficiencies and unlock value by bringing all intermediaries and the customer at the heart of it. And lastly, Aadhaar again is a project which is a very foundational in nature. So a lot of identity and BFSI-led expansion is happening as we see it.
Well, that's pretty interesting, a BFSI-led expansion coming in. But thank you very much, Suresh, for taking out your time and sharing the growth plans for Protein Egov. And interestingly, it's a KYC-related business and coming to a show which is known as KYC. But if you're tuning in, to give you the entire gist of the conversation over the last half an hour, the three important management takeaways we have taken. The new business revenue, that contribution is expected to go up. It's already jumped from 4% to 12%. Going ahead, the margins might be, on the higher side, especially with the product and the SaaS segments. These segments, when they get their launch in, a higher margin accretion might take place as well. And lastly, the 1370 crore order coming from UIDAI. Now this revenue accretion, that will start kicking in from the third quarter as well, and that's pretty much very much important if we look at the company's growth trajectory, as the stock is already beaten down as well. But that's enough for our show at KYC. Stay tuned to NDTV Profit.
Presented by Canara Bank. Together we can.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything personal finance, and that sometimes relates to investments, it sometimes relates to expenses, and other times it talks about philosophy or it talks about tax. Today we're going to talk about two mutual fund schemes at the start, and this is from the actively managed mid-cap category. It's a pretty popular segment of the mutual fund industry, and what we've chosen is the top two schemes by assets under management. It's a simple comparison, but not necessarily a simple one to discuss. Joining me to talk about these two schemes is Santosh Joseph, the founder of Germinate Investor Services. Santosh, there's actually quite a large gulf in terms of assets under management between the top scheme, which is HDFC mid-cap, and Kotak, which is the second. Nearly 30,000 crore rupees. You can fit a whole lot of schemes in that gulf between the two, but these are the top two. What is the standout feature of both of these schemes in your opinion?
Well, to begin with, you will soon realize that in most AMCs today, the mid-cap and the small-cap funds have gone on to become the largest for the diversified equity category. It's no longer, the large cap traditionally or the flexi cap. Today, you have the emergence of a diversified equity fund being so large, but in the mid cap category. So that's a good thing. And another good thing that we have to, commend ourselves for talking today is that it's great to be talking about mid-cap funds when there's strong performance behind it. But today, in the last 1 year, when we have very little to talk about mid-cap, it's great that we are actually analyzing these two mid-caps and the top in the category. In fact, you rightly said so that there's a 30,000 crore difference between the two, and there's so much of the industry that can fit into the two. The first one being almost at 85,000 crores, the second one at 58,000 crores. These are not small numbers by any standard.
Yeah, good point. So therefore, how do you distinguish between the two? HDFC, for example, is going to have a pretty long, both of these will have a pretty long track record. What are the various metrics at the start that you would look at when you would compare these two, and then we'll delve into the details of each one of them?
Yes, both have a long track record. In fact, both have almost 15 plus years of inception if you just look at by the date of the fund. But I'm taking for today's conversation data which is 5 years and less, simply because you remember 5-6 years ago, we went through the SEBI recategorization and the reorganization of the schemes. So based on that data, when we look at the funds, both of them are not only in size, but also in performance and also in terms of number of stocks. At some level, there's very healthy competition. And, towards our conversation coming to an end, I'd like to tell you what this healthy competition does to an investor. But to begin with, what is good about this is you got a very wide, diversified set of stocks that these two actually present. Now, the question is, which one do you choose and why do you choose? And we can quickly look at the numbers. HDFC's got over 75 stocks, whereas Kotak has got over 65 stocks. HDFC seems to be slightly more diversified. Whereas when you look at the top 10 holdings, you notice that there is a difference even in the top 10 holdings between the two large mid-cap funds. In fact, when I was looking at these numbers, you can see it on the screen also. When you put the top 10 holdings out, there are just two stocks in the top 10 holding which are common. Now, this doesn't usually happen in a flexi cap or even in a large cap, because there you'll see a lot more common names. But when it comes to mid cap, this is where the fund manager actually has got room for active selection and active weights. Therefore, you see just two stocks common, 8 stocks unique in both their portfolios.
What would you say about the size of the schemes in terms of number of holdings? You have 75 that HDFC mid-cap holds and 65 that Kotak holds. And sometimes you would question how much of this is truly mid-cap. Would you agree?
You're right. But I'll just add another point over here. When you look at both the funds, the top 10 holdings, they're near 30%. In fact, HDFC is at 32%, Kotak is shy of 30%. So they're not very far off in the top 10 sector weight. Now, the rest, there's a long tail. Both of them have a long tail. HDFC's got a little more longer tail, maybe about 10 odd stocks more than that. It also tells you that there is depth in the mid-cap space for the portfolio manager to actually buy into so many stocks. And sometimes it's about conviction, which will be figured in the top stocks. And sometimes you're about participation, where you have a longer tail of stocks.
Okay. Let's talk about that sector weightage, right? Because that's another factor to talk about. Would you say that they're more or less comparable between the two, or is there a significant difference?
Well, as you can see on the screen, you have both the sectors. The difference in one is that between HDFC and Kotak, the common part is that both of them have banking and financials as the heaviest weight. But after that, you'll start seeing a difference between IT, between pharma, between miscellaneous, and even some bit of exposure to commodities and energy. Now, this is actually what drives the uniqueness of both the portfolios. Now, if you notice, very similar structure in terms of the number of stocks, but when it comes to sector weights and it comes to stock weight, the portfolios start to diverge between each other.
Yeah, it's interesting because a lot of these fund managers very clearly stipulate, Santosh, that they don't really have a sector preference. They have a bottom-up approach to stock picking, and any sector allocation is incidental, but it will still indicate where they are placing their bets, where they are putting the money. So it's important to take note of as well. Would you also look, and you kind of already alluded to this, but portfolio overlap. There's very little between the two, isn't there?
So the portfolio overlap in terms of percentage is 26. In terms of actual stocks, without taking the weights into consideration, there are 19 common stocks between both. Now, let me remind you again, HDFC has got about 10 stocks more than what Kotak has got. But assuming you got 65 stocks and 75 stocks, that means you got a universe of 125, 130 stocks. You have only 19 stocks that are common, which means there is a broad-based. Now, when I was talking about the top 10 stocks, there are two common top 10 stocks between the both, which is Fortis and Ipca Laboratories. Now, if you notice that both of them happen to be from the same sector, therefore, if you notice that if I remove that one sector out, 8 of the top 10 stocks are unique.
8 of the top 10 stocks are unique. That's interesting. What is that meant for their relative performance? First, comparing just these two and how they relate to the average performance and the best and the worst performance of the sector, of the scheme category.
Okay, so let's break this down in 3 ways. Number one, we'll talk about the standard deviation. What is the risk it carries? Thanks to HDFC having a slightly broader framework of stocks, they carry a slightly lower standard deviation. Maybe the beta is also marginally lower than Kotak. On the other hand, when you look at performance, when you look at over 1 year, 3 year, 5 year, and even on an SIP basis, clearly in a tough game, HDFC seems to be winning this game by a marginal outperformance compared to Kotak. Now, when it comes to 10 year, this is where I want to give some good news to the investors. Having these two together, or maybe let's say put it in tandem, where you didn't have the obvious choice of choosing, but you went with both of them, the returns are converging. So when I look at the 10-year trailing return, let's say HDFC would be at maybe 15 odd, even Kotak is at 15 odd. The difference is just 0.2, 0.3. So what does it tell you? You have the luxury of choosing unique portfolios, at least unique in terms of the way they're structured and they're working. 1 year, 3 year, 5 years, there will be difference in performance. But when you stretch this, if you're in the right space with the right set of people managing your funds on a 10-year basis, you're going to be a winner. Now, you're going to be a winner not by concentrating, but diversifying. Let me remind again, 130 stocks in the mid-cap is a great set of universe to be in. And unique stocks being high and less commonality in the top 10 is a beautiful picture for a portfolio to be constructed with two guys fighting for top spot.
Okay, just to reinforce some points, you mentioned standard deviation, and we've actually discussed this on the show many times, but it bears repeating. How do you describe this? And you can perhaps look at it with an example that you've already quoted. And second, you also mentioned beta. Why is that important to look at?
Okay, first let's go with beta and then let's go to standard deviation. Beta is the extent of sensitivity of the portfolio to the market in general. Now, for example, over the last year or so, largely your mid-cap has been flattish to maybe bottoming out. Now, in a scenario like this, if the beta is higher, you will notice that the drawdown on the fund will be more. And if the market does well, it will also capture a higher upside. Now, in HDFC, the beta is marginally lower. Therefore, in a flat to negative market, your HDFC will preserve your capital to that extent if beta is lower. If beta is higher, you will fall a lot more. Therefore, you will lose a lot of your capital. That is beta. Now, standard deviation actually measures the difference of the variability of return over a period of time in simple sense. So therefore, when you are in a fund with lower standard deviation, you are going to experience lesser volatility. Higher standard deviation is a higher volatility, which means the propensity to go up when it's going up and go deeper when it's going down. HDFC and Kotak both have actually very good standard deviation. But here HDFC seems to be doing slightly better, both in terms of beta and standard deviation. Now, the beauty of this exercise is when you take standard deviation and beta, that's when returns become relevant. HDFC experiencing low beta, low standard deviation, higher number of stocks has been able to edge out Kotak to deliver superior performance, which means that is the winning point for an investor. Lower beta, lower standard deviation, yet better performance.
You know, about 6 years back, and this is the last point that I want to raise with you, Santosh. 6 or 7 years back, the argument was made very vociferously to go towards passive for large cap. And I think that a lot of people have benefited purely from the cost perspective, because largely, while active fund managers over the last 18 months might have been able to beat the benchmark in the large cap space, the degree of beating the benchmark is not covered for that cost differential between passive and active. Is that argument getting stronger in the mid-cap space as well? And would these two feature in the top list for you if you were to advise people to buy a mid-cap fund?
I think you make a very interesting point. What is happening in the mid-cap space, considering that number one, we're constrained in what the definition of mid-cap is and the long list of stocks. You notice that across the industry, mid-caps tend to larger number of stocks, which actually is because the universe itself is much larger. Now, most of the guys are not wanting to miss out on the performance of some of the smaller weights. That's why the list of stocks increase. And all of us have this opportunity to participate both in the passive and the active equally. Therefore, the portfolio manager also is aware of that he's fighting against the index and the passives. So therefore, he's also trying to keep his fund as aligned to passive as possible, because the first goal is to beat the index. The second goal is to outperform the index, because there is a slightly expensive TER for an active fund versus passive. Now, I think clearly the data is out in the mid cap space that there is space and there is value that the active fund manager or even the active cost of the extra expense that you pay is now justified. This has happened even in bouts, even in large cap. There are points where the passives outperform the large cap. There have been large amounts of time where even in large cap, an active fund manager has been able to not only outperform the index, but also justify the extra expense the investor pays.
And would you say that these two feature in your top list? Quick answer.
Absolutely, yes. And I think for an investor, if you chose either of them, you're great. But if you chose both of them, it's a beautiful win-win. So we're not debating on which is good or which is bad. I think both are great for the portfolio. Now, if you chose any one of them, you're a winner. If you chose both of them, also you're a double winner.
Great. Santosh, thanks so much for taking the time. Pleasure speaking
with you.
Thanks, Alex. Today you also had the Association of Mutual Funds in India that declared the flows data for the month of October, and this is interesting data that came through. So let me take you through some of the headline numbers. On an overall basis, you saw inflows into the mutual funds sector or industry to the extent of 2.15 lakh crore rupees. Now that is a large number, particularly when you put it against the 1 lakh crore approximately of outflows in the month of September. But this is normal because you have inflows at the start of a quarter, in October in this instance, on account of the fixed income mutual fund space, and outflows at the end of the quarter, which is what you saw in the last month as well, in the month of September. What is more interesting is that you had inflows into actively managed equity mutual fund schemes fall off just a tad bit. It came in at about 20,000 crore rupees net of those new fund offers, and that compares with about 29,000 crore rupees in the previous month, in September. There weren't too many new fund offers in September. What has stood out is that the flexi cap category has gotten robust inflows in the month of October to the extent of about 8,900 crore rupees. That's quite stellar. Now, beyond this, you had significant inflows into gold ETFs. That continues, but it's lower than the last month, still about 7,500 plus crore rupees into that category, and also robust into other ETFs, which also include silver ETFs. Why has the inflow fallen off just a tad bit into equity? Well, it could be a very simple reason, which is that the festive season came about in the month of October, and a lot of times you see that people tend to put a pause on their investments during these festivities because of various expenses that kick in. At least that's what industry participants anticipate has happened. The last point is the SIP flows, and that once again is at a record high of over 29,500 crore rupees. And I think that is a good sign as well, because that means that durable money is continuing to come through into the mutual fund industry. This has to do with inheritance from the lens of the woman. It's an important conversation to have, and I'm joined today by Tanya Apachu Kaul, who is lawyer and legal influencer. Tanya, thanks so much for taking the time, and appreciate that you've taken the time to speak to me about this. Do you think
Thank you so much for having me.
My pleasure. It's my pleasure entirely. Do you think that there's a lack of enough awareness about this? And specifically, from a legal perspective, is it important to understand the distinction between male inheritance and female inheritance?
Yes, absolutely. A lot of people are not aware that a male succession happens differently than female succession. And, usually in our culture, families don't really take the trouble to inform their daughters or make their daughters aware of what the law is. But the sons are proactively more aware of things. So I think there's a huge gap in awareness and education for women, especially when it comes to succession, because there is a lot of difference in the way daughters succeed.
Talk about this, because by my understanding it would depend on which law you would fall under, and that, as things stand right now, because there is no uniform civil code, depends on your religion. Is that correct?
Yes. Absolutely. So succession depends on which religion you're from. Hindus have a codified law, which is the Hindu Succession Act. Muslims have their own personal laws. So Shias and Sunnis will inherit differently, slightly differently. Christians also have their own laws because they have the Indian Succession Act, but some parts like Daman and Diu, Goa, some Tamil Christians and Protestants, they inherit differently. They have their own laws. So it's a broad framework of laws, and it depends entirely on which religion you belong to.
Okay, let's primarily deal with the Hindu Succession Act as well as the the broad Succession Act, the Indian Succession Act. So let's first talk about the Hindu Succession Act. It would depend, by my understanding, Tanya, please correct me if I'm wrong, on whether or not you have an HUF, which is a Hindu undivided family, or not, right? And there are different rules that apply. Can you take us through the salient points?
So HUF is a different entity. Not every family has a HUF. It depends on whether they've created a HUF for their own family. And then we have the concept of ancestral family, ancestral property, which is very unique to Hindus, which is not there in any other law. So ancestral property is any property which is in the fourth generation. So it's come to you from the fourth generation. It has been undivided in your family, and all the family members are jointly enjoying it. There's no partition on paper. So that property is your ancestral property. So I think the biggest confusion, the biggest problem everybody has is they think that maybe their parents or their grandparents' property is their ancestral property, which is absolutely wrong. So that is specific. The HUF is specific, and ancestral property is very specific to Hindus. Also, the most important differentiating factor between the other laws and Hindu Succession Act is the fact that since 2005, daughters inherit as equally as a son. So you have, as a daughter, right to your parents' property, right to your ancestral property equally, just like a son. So I think this is the biggest differentiating factor.
And so that is how it stands right now. From a legal standpoint, therefore, and is that the same for the Indian Succession Act?
No, it's not.
So how does that work? And then we'll get into the nitty-gritties.
So for Christians, the law is such that the wife gets half the property of the husband, and the other half goes to the legal heir. So it can be to the children. So here the wife has an upper hand because she gets half the property.
Understood. And how does that work from the Hindu Succession Act standpoint?
So the Hindu Succession Act, the wife, the children and the mother are the legal heirs, the class 1 legal heirs of the husband, of the father. So they inherit equally.
Okay, so in the Hindu Succession Act, when it comes to a woman that is the owner of the property and there is a succession that needs to follow through, does her husband have access or rights to her property?
Yes, absolutely. So if she has passed away without leaving a will, then the Succession Act will apply, and the husband and her children get equal rights over the property. If she doesn't have children, it will all go to her husband. If her husband is deceased too, predeceased, and she doesn't have children, then it will go to any lineal descendants of her husband, which is important to note. And if there are no lineal descendants like a brother, sibling, or parents of the husband, it can go to any members of her husband's family. So there is no property which will go back to her parents or her siblings unless she writes a will. So if she has inherited any ancestral property from her parents, that will go back to her parents' side of the family. Anything that she has acquired on her own will go to her husband's side of the family.
Okay.
So it's important that a woman leaves a will if she wants her property to go to anybody else.
It's important for everybody to leave a will, Tanya, because the question that I have for you is that all of the rules that we've discussed so far is in the assumption that there is no will. If there is a will, it supersedes all of this, doesn't it?
Absolutely. The will is the most important document that you can make for your estate planning. It supersedes every other law in the country. Your wishes go into the will, and if it is a proper, valid, registered legal will, it will supersede everything else.
Any pointers that you would have in the writing of the will to ensure that it is foolproof? Because this is something that you hear often as well. It can be questioned, and if it gets mired in that legal whirlpool, then it's not going anywhere. You can have decades where it just gets stuck in court.
So the whole idea of a will is you can actually write it yourself on a piece of paper, and you can sign it with 3 witnesses and add a doctor's certificate that you were of sound mind while writing the will. But as a lawyer, I would always suggest people to go meet a lawyer and get it drafted through a lawyer so that it is foolproof as much as it can be, so that it is not contested. And also register your will, because then the copy of the will be with the sub-registrar's office, and it is very hard to challenge a will once it's registered. So these are 2 steps that you should definitely take if you're seriously making a will. So,
okay. Now, in your legal expertise and in your experiences, is there one common mistake that you see women making when it comes to their inheritance that you wish was not the case?
I think the common mistake is they're not even aware that they have access to their parents' property. They have certain rights, and the most common mistake is people just give it up, because that's how the society judges a woman if she's asking for property of her parents. And most women are not aware that they get parents' property. So there is this whole contradiction that you're told that you're not going to get your parents' property, it's going to go to the son. And then you're told that you're going to get your husband's property because he's everything to you after marriage. And then the contradiction is that it's the other way around. You actually have legal right over your parents' property, and you don't have legal right over your husband's property while he's alive. So, there is that contradiction which a lot of women don't know. And I think culturally they're told that they cannot ask for property. It makes them sound greedy. It makes them sound like bad daughters. I think that is the biggest mistake. We're not even going to the point where they are actively trying to get property from their parents. So, the issue is stopping right here at even trying to get or trying to make a will. So even now you speak to women, nobody is making a will. Very, very rarely is a woman making a will. And very rarely do women even know that if they don't make a will, all their property might go to the husband's side of the family. And this is an issue we saw during COVID, right? Because there were couples passing away together. There were families which unfortunately passed away together, and property went on to some random relatives in the husband's side of the family who are not even close to the girl, close to the woman. So it's very important that these things be kept in mind, and you actually take care of estate planning, which currently nobody does. Very rarely.
Hopefully we're going to cause a few people to have a conversation about it, Tanya, and that's the objective of this program as well. Thank you so much for taking the time. Pleasure speaking with you. Important topic to talk about.
Thank you so much. Thank you so much. It's a pleasure.
All right, well, that brings us to the end of this edition of Your Money Matters. Tell us about what you would like us to talk about. We're happy to talk about it. Let us know in the comment section, and stay tuned. This is NDTV Profit.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band Jala will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
We have with us exclusively in our studios today the management who is going to be talking to us, Mr. Chanchal S. Rajora, the Group CFO and Advisor at Transform and Rectifiers.
Director of Finance now.
And Director of Finance. Congratulations, sir. Thank you so much for coming in. Really appreciate you coming in and talking to us about what's happening, because I think it's important to address what the street's concerns are. So let me get straight to the point. The World Bank debarment. What has happened? We saw your exchange filing yesterday, but if you can tell us in detail what the allegations were, what the issue is.
Tamanna, actually this, we were also surprised when we got this letter on 4th of November from World Bank. Basically in 2020 we had done a project with Nigeria, right? And we were part of basically a bigger project which was funded by the World Bank, and our contribution was around $24 million, right? And we had supplied all the transformers and we have received the payment also, right? And we were actually taken aback with this, why this has come up into to us, right? There were some issues with this order on a border level, And then World Bank has last wrote us in 2023 that there are certain changes we wanted to see that is happening in the company or not regarding the corporate practice and us. And we told them anytime you are welcome if you want to see anything. Well, they did it this as per our information, they did it with all the companies which were involved in this particular project. And after that, we never heard anything about from them. So suddenly this has come up. So we are taking up with the World Bank very strongly that why this has come up to us.
No, but the allegation is alleged corruption and fraud. So corporate governance is a different thing. It's not about issues with the order. The allegation of corruption and fraud. Where do you think that would have come from?
No, we don't know because we were not at all involved in these any kind of these things, and we are very, very clear from corporate practices in our side that we don't tolerate these kind of things if anything
What
comes
is
up.
the mechanism you have to challenge this?
You know, we have already mechanisms in place and we are taking it up on that, and at every level there are the controls in our companies in place. Look, understand, if the processes and the governance is not in the company, we cannot be the first company in this country to declare the results in 8 days time, which takes a great amount of energy and great amount of work involved into that.
But specifically on this Nigeria project, you said that it's from 2020. When was it completed?
Look, this project was completed in 2022. Okay. Right, we got the 90% payments of the entire transactions in 2022, and last 3 transformers which we sent them, they were toppled in the port. So we have to basically make the new transformers and send them, which we did in 2023-24, right? And the payment of the balance 10% we received in this year in April itself. So, you know, understand one thing, had anything was there related to us or our practices or ethics, World Bank would have not released this payment to us, right?
Okay.
So,
sorry, please finish your point.
Yeah.
So, okay, what I'm asking is, until this matter gets resolved, you would have, by the way, would love to know how long do you think a matter like this takes to resolve if it gets resolved? And until it gets resolved, are there some current or future projects in that 18,000 crore order book or 18,000 crore order pipeline that you're targeting that you cannot apply for?
Neeraj, and I have an order book of 5,500 crore rupees as on that. None of them is funded by the World Bank.
Okay.
None of bank is related to any of the government entities of the third world countries where the World Bank funds. Right. Okay. My 18,000 plus crore inquiry does not contain any such inquiries for us. Right. So financially there is no impact on us.
What about international versus domestic, sir, at this point?
Sir, say around out of this 18,000 inquiries, around 10% is the international inquiries, which is again from the private entities, not with any government entities. And fundamentally, you must have heard to me whenever I came or in my conversation also that we have also stopped quoting to the projects where we have to supply the transformer at the company's site and do the FOR things. We stop that. We are only pursuing for the export orders also, which are either on the ex-works basis or on the FOB basis.
Okay.
We don't do that those kind of things.
Okay, but just one more question on that. How long does it take for a matter like this to get resolved? You would have some consultant or some lawyer for this?
Yes, we are working with some consultants on that, and it may take 6 months to a year to sort out these issues.
What is the impact on new business that you see from this World Bank department? Is that going to be a parameter for new orders at all? Anyone who's coming to you will look at this. Do you see that hampering in that way, or you see no material impact at all?
No, Tamanna, it's not going to give any material impact on us, right? New business is going to be as it is, right? Here, the quality of the product is there, my practices are there, and people have been seen me doing the business since ages. It is not that I just came yesterday and doing the business, right? So the people knows that what kind of the deliveries of this company is this, right? And we are working with all the government entities here also. They also know that what kind of the company work is doing.
So there have been no conversations or calls since this came out yesterday from any government entities or current clients on what does this mean?
No, not that. The people understand this, okay. The investors are has got jittery on this. We have been clarifying this to everybody since yesterday when came. And you know, if you heard, your team was there in our con call yesterday. And before anybody asked the question, we clarified this issue to everybody. Because we are the company, always come up when there is a problem, we always come up that yes, we are here to give the confidence to the people that we are doing the right things.
The Nigeria project, was it a government tender?
Yes, it was a TC, Nigeria Electricity Board supply. Right. Look, all these third world countries where they don't have the money are either funded by World Bank or funded by the ABD or funded by the Exim Bank of India. These are the products like that, where there is a policy written by these banks and they have to do the procurement accordingly.
Are you doing a lot? You said that you're changing the kind of projects that you're bidding for, that you're getting into. You're not doing a lot of these anymore.
We don't have anyone.
We don't have any. Okay.
We don't have anyone, and neither we intend to do that.
And was there any? I'm just wondering, what's the genesis of this? Was this some complaint done by the Nigerian government?
Yeah. Not by Nigerian government. Basically, it was a complaint done by some private persons.
Okay, fine.
Yes, on that basis, World Bank took a cognizance. Maybe there are some internal competitors of the local contractors or there, and because ultimately the major work was done by the local contractors.
So you're saying you may have gotten caught up in internal Nigerian politics?
Yes, that's the point.
Okay. So that's a good way. Let me come to the second part of it, sir, which is also your numbers. Since we have you here with us, we'll talk about Q2. And Q2 also looked like a bit of a tough quarter. Can you take us through what the whole scenario was there? Is it because of the lumpiness of the business, seasonal issues, or why did you see, for example, margin sliding?
Tamanna, when you are on a long journey, sometimes bumps comes. And it is good to come the bumps, because if the journey is so smooth, we don't realize the importance of journey. We don't realize that what we are doing and how we are doing.
So it was a bumpy quarter.
Yes, it was a bumpy quarter. There were a couple of issues related to the raw material supplies. The government sometimes comes up with the new policies which creates a problem to us. I'll give you very small things that suddenly they come up that since India has got enough copper, you should have the BIS approval if you want to import the copper, right? And it is related to the copper rods what the country is importing, right? We do agree it is there. But you know, we are importing the copper conductors from the different countries to meet out the power grids requirement of the reactors and transformers, because India cannot give the supplies which we are looking for or we want, right? My consignment comes to the port and the custom says that no, you need the BIS clearance for that. It took us 2 to 3 weeks to make them understand. Look, sir, this doesn't come under that preview.
So that happened this quarter?
That happened in the product related to this quarter. So that my considerable amount of jobs got delayed into that. And this particular quarter rains were very, very heavy.
But can there be a spillover, Mr. Rajara? I think the question is this, right? At the end of the August quarter, on the con call, you had said that margins levels are sustainable. You expect EBITDA margins in the 17 to 18% range.
Right.
They've come in way lower.
Yeah.
Do they revert back to normalcy in Q3 itself, or is it difficult to say that right now?
Q3 will be in the line of the Q1 results.
Q1 results.
Yes, that's right. Okay. And you know, we will have the spillovers around 100 odd crore of the finished goods is already there, which we could not able to deliver because of the rains and all. It is getting spillover in this quarter immediately.
So both revenue and margins stabilize, you saying, in Q3?
Yes.
I want to understand about order book though. There was a 40+% decline year on year in the order book, or not order book, but orders received. Why is that?
I don't think it is. If you see that if you compare to year basis, my order book is almost at the same levels, right? And you know, we have been telling you that fundamentally we are working on the orders which are related to our delivery times and our margins. We have been telling from day one now, and we are on those direction completely. We got around 600 crore rupees order of this quarter also, and as we have been guiding that by the end this year we will be having around 8,000 crore rupees of order book in hand. And that's what is our target, and we are working on that. You know, if I keep taking the order and I don't deliver, what will happen? One fine day I'll end up paying the delivery charges, which we don't want to do that. The purpose is that we want to have a sustainable business where we can grow our revenue as well as we can grow our bottom line.
So is it right to say that because you saw these delays on account of raw materials, various other factors, you delayed taking orders that you might otherwise have?
Yes, sir. Yes, sir. Yeah. And also, you know, we are more focused on the orders now, which will give me the more margins. Rather than here and there and havoc manner, I keep taking the orders, which I don't want to do that.
So therefore, very quickly, Mr. Ajra, out of time, but net debt-free company in the next 18 to 24 months, the guidance stays. $1 billion revenue target, 3 years, the guidance stays. And margins at 17-18%, the guidance stays.
Yes, all
by 26, 7 to 18% average margin stays.
Yes, that will be there.
Okay.
Will be there. And you know, one point also I would like to mention it here, which is a positive point, which in this quarter has come up. If you see my console books, my subsidiaries are contributing a very good amount of profit to us, which is basically strengthening our view of going on the backward integration and expanding on the transformer components, right?
Are you coming back to 15% margins by second half?
He's saying 18%.
18%, okay. Great.
Not the second half, in coming quarter.
Okay, excellent. There you have it. All right, thank you so much, sir, for coming in. Great to see you take all questions. A lot of time management don't like to take questions from journalists. We appreciate that you're coming in, you're facing our questions which we're asking on behalf of
we are always there, and any time is there. You know, it's our duty to satisfy the investors and the stakeholders, right? And the tough time, if we don't do it, then no point. Right?
No, that's the. I think that's the right thinking that a lot of management should have.
Yes.
So really,
thank you. Thanks a lot, and thank you for having me here.
Let's go across to Mr. Gujral. Mr. Gujral, great having you. Thank you so much for taking the time out and being with us. And congratulations on what looked like a very strong quarter. It beat estimates as well. What led to this?
See, we had a weak quarter in the first quarter because of the negative turnover. Negative growth in turnover. This time the turnover has rebounded to 37% growth quarter on quarter. My exports have done very well. All my high margin verticals have shown a very robust growth of 20 to 30%. The railways and all that small base, they have grown even much higher. So overall, the strategy which we had started out to implement last year has paid off, and there has been a good increase in EBITDA margin, overall EBITDA, growth in PAT, PBT. So all numbers are good. And we're very confident that going forward, this will be sustained in the remaining half of the year also.
That's very good to hear, Mr. Gujral. So therefore, double-digit margins possible in the second half. Am I interpreting that right?
No, we had guided 8.5 to 9.
Yeah.
We sort of revisit our guidance to above 9,
yeah.
Whether it is 9.4, 9.5. First half is 10%.
Yeah.
So typically the second half is better.
Yeah.
But I think we should be able to give north of 9% positively. So whether it's 9.4 or 9.5 or whatever, I think that we can wait for the next 6 months.
Oh, that's excellent, because the street will certainly take cognizance of the fact that you've come in considerably higher than the consensus estimates as well. 8.8% was what was projected for the second quarter. You've managed 10%. I do want to ask, and I'm pretty sure that we'll ask more about the operations, but I want to ask about this acquisition. You've made an acquisition of 60% stake in a company in the defense space. And 230 crore rupees is what you're going to spend now, and you're going to acquire the remainder of the 40% later. Our understanding is that this is only the tip of the iceberg. The opportunity that it provides is quite considerable. Can you give us some color on that? What is the revenue recognition like? What is the revenue potential?
See, as we had already shared, we were looking for inorganic growth in the defense sector because that sector was not in our portfolio. And Elcom is a very sort of reputed company, almost a 5-decade-old company, was set up in 1978, and gives a cross-section of solutions cutting across surveillance, communication, telecom, and other verticals to the armed forces and paramilitary forces. It has a top line of about 200 crores last year. We expect it to grow marginally this year. But going forward in the next 2-3 years, I think with the Elcom management being with us and we being there is a potential of growing this portfolio by the base is small, 200 crores. So by about 50-60% in the coming 2-3 years.
Sir, Tamanna here, and fantastic quarter. I see IT and railways as a segment has really fired. Is this a bump or sort of an anomaly, or are you seeing this continuing? What has happened with this particular segment? If you can just throw some light on that, because that obviously has boosted the numbers overall.
See, railways had a small base to a 50% growth, a marginal increase leads to a 50% growth. But we are very focused on railways, and with that sort of objective in mind, we have entered into a joint venture with Master of Italy. So I think in the coming year, and this joint venture will go on stream next year, Q1 of FY27. So I think next year I should see even a better performance in terms of absolute numbers in railways, which this year should be about 80 or 80 odd crores. Next year there is a potential of it going up to 170 to 200 crores or even more, including the joint venture company.
No, so what are the synergies that Master brings on board in terms of, and how do you look at that railway segment pipeline because of this joint venture?
See, Master is very strong in railway, high reliability electronics across Europe and other parts of the world.
Right.
And we would be manufacturing for them for the Indian market. And once we are servicing the Indian market, the confidence between the two partners goes up, and it opens doors for us to service the export market in years to come. I don't say it maybe in the year 26, 27, but further down the line, I get integrated to the supply chain of Master to service its global clients. So we have all the railway certifications. So it's an ideal fit that we give them cost-effective solutions in India for the Indian market, and also make India as a base for servicing their global demand in the years to come.
Got it. Mr. Gujral, you made several acquisitions / partnerships in the recent past, and you've talked about the revenue potential of all of them. You've also got that ECMS update that you've talked about already. 3,800 crore rupees was FY25 revenue. If you put all of these things together, and you're saying that over the next 2 to 3 financial years, you'll see quite a bit evolving, where do you see FY28 or FY29 revenue?
I think FY28, we should be closer to $1 billion. FY28-29, we should be closer to $1 billion.
You stick to 30-35% growth, which means about 5,000 crores of revenue in FY26, right, sir?
FY26, we stick to about 30% of growth. But the orders which we have in hand, we have tied up some onboarded major global customers, which have a potential of giving us $100 million of revenue next year. There are 8 major customers, cutting across verticals: industrial, automotive, communication, power management. We have also signed what you call framework contracts with a couple of our existing global customers.
Got it, sir.
Which have a potential of giving 250 million revenue over the next 2 to 3 years.
Lovely.
So based on this, we are very confident next year would be much better than this year in terms of all the parameters.
Wishing you all the best for that, Mr. Gujral, and looking forward to talk to you again very, very soon. Thank you so much for joining in. In conversation with the management of KPIT Technologies, I'm Neeraj Shah, of course, and we're talking to Mr. Kishore Patil. Mr. Patil, great having you. Thanks for taking the time out and speaking to us. If there is any complaint that anybody could have at the current point of time with KPIT after the Q2 numbers, and they seem to be largely in line, and I'll come to KPIT, the quarter 2 numbers as well. But the complaint can only be that after spoiling investors and shareholders for between 15 to 20% growth every year for the last so many, it seems that FY26 is turning out to be a consolidation year. Would that be a fair way to term FY26?
Yeah, I mean, naturally, the way we have done in last 4 or 5 years, this year, our growth has been below, that lofty numbers, if I have to say, or even our expectations. And everybody knows the reasons, and we have been coming out. So absolutely, but at the same time, I think if the things I can see for them to cheer is 2-3 things. One is the pipeline building and winning has been consistent. Secondly, this quarter, we have also announced a significant large deal, which probably help us to really build revenue momentum going into the fourth quarter, or especially in the next year. And as we have said that our discussions with the client, there is a positivity, there is a more clarity about tariffs, And we do believe that there is a positive sentiment, but more importantly, we believe that there are tangible opportunities for us to work on next year.
Now, you've done some interesting things, and a lot of people write to us, tell us about a lot of things that KPIT are doing in their own mind, which could be meaningful. Now, one of the things that came up, actually just the macro question before that, and the macro question is that while you do what you're doing in order to improve or remodel KPIT, if you will, for the future, would there be a string of pearls, inorganic strategy that will continue to add layers and verticals and modules of growth to the existing offerings of KPIT?
Thank you for asking that question. It gives me an opportunity to explain exactly what the growth strategy is and how things will turn out. As you have seen this year, we have invested into 3-4 major areas. One is the CareSoft, which is largely to cost reduction. Also in terms of improving the efficiency of manufacturing. Second, we have invested into NDream, which is to improve the consumer experience for clients, which is a main reason for them to compete with the likes of Chinese and new age OEMs. Then we have invested into Helm, which is basically getting some more lead into AI and more into autonomous. So the whole idea for us is moving from services to solutions to, as far as possible, take a larger part of the work, and not only what we bring to the table, but also the ecosystem, and put it together a full solution. And the other part is also out of this, focus on certain products which will help us to build some solutions. So I think this is the basically change we are doing. And if you look at the solution part, last year we have more than doubled the revenues from the solutions. So it is now 18% plus revenues come from solution. So we do believe that this is how we will move forward, and it will improve certainly a value to the client, and of course we'll capture that value, and also we'll do a more share of the work with the client, while with the productivity of AI and the solutions and the products we have, there will be certain cannibalization of revenue. So this is how we are putting the strategy together. Okay. Now the other part is there are other areas, other adjacencies in mobility, whether it is micro mobility, whether it is off-highway commercial, whether you look at defense, some of these areas, some of the work which we are doing or some of the clients we are working, they are getting into these areas. That's where we can leverage this solution, and that's where we can expand the market. That's how we are looking at it.
So green hydrogen, sodium ion, etc., all of them for part of opportunity for listed KPIT, or would that be under a separate vertical? For example, somebody is talking about Trentar, right, and saying that Trentar, when it starts, could actually add meaningfully to top line as well. Are there some timelines that you're working with these technologies as well?
Yeah, I think to your point, there are multiple scenarios, and we do continue to invest into technologies. The timing of some of the technologies could be very different. In my opinion, currently looking at the state of mobility and the hydrogen or some other battery chemistry will be a few years down the line. But if you don't start today, that won't come, and then we will get certain revenues in terms of royalties and the other businesses in terms of integration. So we have started all the pilots and etc. But the core business and adoption will happen later. At the same time, many of the other technologies I spoke about, and I would add some areas like cybersecurity, and I'm sure you have seen that how cyber attacks have impacted some of the OEMs. And some of these things those are the areas where will give us immediate return. Not only that, I think we invested into certain specific technologies which for many OEMs who are struggling in the current programs right now to deliver, how we can really help them to reduce that time. And I think that is again will give us the opportunity. And the markets, I think I always say that China and some of the emerging markets are a meaningful part of our strategy. I think that will give the business in the meantime.
Wishing you all the best for that and more, Mr. Patil. Thank you so much for speaking to us today.
Namaste India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band Jala will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from
Hello and welcome to NDTV Profit. I'm Vikram Oza and you're joining us on The Big Question. And let me begin by setting out the Edtech story in India because that's our focus. Just a few years ago, Edtech was India's most exciting story. When the pandemic shut down classrooms, millions of students, they turned to screens and Bajaj had become a household name. Growth was explosive, valuations were soaring, acquisitions multiplied and global investors were calling it India's answer to Silicon Valley's biggest disruptors. Now, online learning had gone mainstream, and the future of education was looking very digital, quite profitable, and for that matter, quite unstoppable as well. But that dream did not last. As schools reopened, the easy growth seemed to vanish. Bajaj now is, of course, drowning in debt and lawsuits as well. Another EdTech major, Unacademy, it has downsized. Investor sentiment has turned sharply skeptical of EdTech as a sector. So the question now in this story, can the EdTech model reinvent itself? Can it revive itself? So enter artificial intelligence, AI. It's the new force that is reshaping many sectors, and it includes how India is learning as well. So definitely our education sector. AI is building virtual tutors, and they personalize lessons for every student, also automates test preparation. It generates content at lightning speed. Also, what it's doing is it's promising what first generation edtechs could not do at that time, which is scaling with efficiency and also, very importantly in business, profitability. What it's also doing, though, is threatening the one thing that has made these platforms work, which is the human connection between the teacher and the learner. So today, when we're talking about the PhysicsWallah IPO, which is, of course, grabbing headlines, we should pause to remember that this story, the Edtech story, started with free YouTube lectures. Now we're talking about a roughly 2,800 crore rupee revenue company, which is PhysicsWallah. And now with their 3,480 crore rupee IPO, it stands at the crossroads of two revolutions. One which is powered by human teachers, and the next driven by AI. Artificial intelligence is now starting to become at the heart of it. Can edtech companies like PhysicsWallah balance both of these, technology and trust, which you need in education? Is that what it takes to build a sustainable edtech business model in India at the moment, which is our big question today? So yes, AI disruption in many sectors, including education, but is AI disruption a friend or foe to India's edtech sector? In fact, we've been talking about this. PhysicsWallah IPO was at the heart of it. And yes, their IPO is grabbing headlines. So when we were speaking to Prateek Maheshwari about this, the co-founder of PhysicsWallah, he explained to us how he sees it. Is it a friend or foe? We're going to debate this, and we have an excellent panel waiting on the other side. But just listen to what he said when he was discussing this at NDTV Profit Studios earlier today.
So currently it's an amazing friend. AI ने learning को hyper personalize कर दिया है. 4 करोड़ से ज़्यादा डाउट्स AI बच्चों के आज के टाइम पे हमारे प्लेटफॉर्म पे सॉल्व कर रहा है, लेकिन विद 88% एक्यूरेसी, जो कि ह्यूमन की एक्यूरेसी के नियर अबाउट आ चुका है. एट द सेम टाइम जो ये मेगा बैचेस हम पढ़ाते थे 4,000 रुपये के अंदर, डाउट सॉल्विंग वाज द बिगेस्ट चैलेंज, जो कि AI ने बहुत हद तक सॉल्व कर दिया है. हम सबसे ज़्यादा डेटा जनरेट करते हैं क्योंकि सबसे ज़्यादा बच्चे हमारे पास में हैं. उस डेटा से AI फर्दर एम्पावर होता है. तो वी हैव 100 पीपल team who just works on AI set of things. AI Guru, AI Grader, AI सहायक, ये couple of marquee products जो हमने AI के अंदर लॉन्च किए, जो कि बच्चे बहुत पसंद करते हैं. At the same time, your question is कि क्या कभी AI tutor आ सकता है जो टीचर को रिप्लेस कर सकता है? मेरा पर्सनल ओपिनियन है ऐसा नहीं हो पाएगा, बिकॉज अगर टीचर हमारी लाइफ से रिप्लेस होगा तो दैट विल बी अ वेरी डिफरेंट सोसाइटी. मतलब दैट इज लाइक रिप्लेसिंग पेरेंट्स फ्रॉम योर लाइफ, तो वो तो मुझे नहीं लगता कि नियर फ्यूचर में होने वाला है. पर अगर AI ट्यूटर आता है तो वी आर अ कंपनी इन राइटली पोजिशन टू सॉल्व फॉर इट, बिकॉज सबसे ज़्यादा डेटा हमारे पास में है, इंडिक लैंग्वेजेस से लेकर के स्टूडेंट के पैटर्न्स हमारे पास में है. एंड वी आर द स्ट्रॉन्गेस्ट AI टीम, नॉट जस्ट इन इंडिया बट ग्लोबली इन एजुकेशन. सो वी विल बी एबल टू क्रैक इट.
All right, so that's what we got from Prateek Maheshwari when he was speaking to us about, whether it's a challenge to tackle AI when it comes to edtech sector and how he sees it at PhysicsWallah as well. So with that kind of backdrop, let's debate this with our panel. Let's introduce you to them. For a startup investor perspective, we have Rahul Agarwala joining us, and he's managing partner at Sense AI Ventures, also director at Nimbus Online. We also have an educationist, Aditi Jain, joining us to tell us if AI can truly democratize education and learning. And there they are. Jaideep Kevalramani is also with us. And he, of course, is head of employability, business and CEO at TeamLease. And he's here to give us a larger sense of the edtech sector, where exactly it stands today. Also on our panel, we have Abir H. He's Executive Vice President for Academics, Content and Emerging Technologies at Edtech. It's great to have all of you with us. And let me begin by turning my first question to Rahul Agarwala. When we start off talking about edtech as a sector and the possibilities that AI brings to the table now, is that going to be a challenge for the sector? Because here we are talking about a sector, like many others, which can use AI for its benefit, or perhaps, sometimes you wonder whether it's going to make it redundant. Where do you stand?
Great question, and thank you for having me here. I think the key, so if you look at education didn't change for many, many years, right? I mean, if you got a teacher from the 1900s also into a modern classroom, it was still the same. There's a blackboard, chalk, and that's how teaching was done. But, EdTech wave happened. Some of the distance education, we're doing Physics Wala and so many such examples like Bajaj, etc. But you see, even then, teaching it's remained one-to-many. I think AI offers the opportunity to go to 1:1 because people learn differently. Some students have visual learning, some people have completely different way the same problem can be taught. And also a teacher is constrained by the class size to teach to the middle of the class. So for the top students, it becomes a bit boring. And for the bottom students, they can't really still grasp what he's teaching. So, in the interview, he was talking about doubt clearing. But doubt clearing one-on-one is even better, right? And that, I think, is the future which AI promises us.
What's your sense, Jaideep, from the kind of research perhaps that you would have done in terms of increasing employability, the kind of use that AI has in the edtech sector? Does it enhance the kind of teaching that is imparted on edtech platforms? Or in your opinion, when you're going to an employer, this kind of, sometimes you wonder what role AI has played in the entire learning that you may have done through an edtech platform like a Physics Wala or any other, because now there are so many of them.
Sure. Vikram, thank you so much for having me over here. I agree with Rahul, it's an accelerator. I mean, if you take a step back, since the core of it is around how edtechs are using AI, edtechs have done two big things for the country. I mean, there is a concept of digitization versus digitalization. Edtechs are bringing in digitalization, not just converting physical into digital. Also, we are trying to solve India's gross enrollment ratio, which is very low, and we need to incorporate that if we want a higher economic output, and also solving the employability issue. Like in the technology space, we've got vibe coding. EdTech is bringing in vibe teaching, where teachers are taking the assistance of AI to teach better, and students are taking the aid of AI to learn better. The conversation in the classroom is no longer about what have I taught and what have you learned. Let's come and discuss what has the generative AI and the large learning models thrown at us. So the quality of the conversation in the classroom is shifting from the impact of memorization to impact of application. And edtechs are playing a role of a glue and a catalyst in this entire thing. The platforms exist. We just now need to bring in the layer of AI. And very soon, next year onwards, we will see AI native platforms in the entire edtech and the higher education space.
So AI native platforms, when they come in, how does that shake up the entire system? Aditi, Jen, you're seeing an evolution over here of edtech. Is there a risk that we could see commoditization happen much more with AI? And the lines between content and teaching, those lines getting blurred, that differentiation may not stand as much.
So to this, I would refer to William Wordsworth's famous line that really touches my heart when it comes to education is nature never betrays the heart that trusts her.
Right.
As long as nature will be inspirational, we will never, ever falter in the field of education, right? Now, AI is not the destination, but the bridge in the path of learning. Right. And as I can lightly say that George Curio said that it can never replace great teachers. AI can never replace, technology can never replace great teachers. But if it is in the hands of great teachers, it can be transformational. Now, the kids of today, as we all know, they are so smart. They are so smart. And they are also at a very, very tender age when they're learning in school. So when we are there and we are using AI, these kids this dependency can actually ruin their vastness that they can reach, the magnitude of learning that they can reach. So this, if it is used as, as an assistance, it's like having an open library where it becomes so easy that you don't have to look for the book. You say it and it's right there in front of you. So when teachers use it correctly and there is no dependency, as I am reiterating, I think it can really assist well. But if we become dependent, our faculties are not going to sharpen. We can, you can never outwit nature. We have the multitude.
That point, one has to accept, Aditi, at this stage, when we're talking about uses of AI, when it comes to education in particular, that bit, Abir seems to be nodding and kind of saying he's in the teaching business as well. So tell us, Abir, from your perspective, the kind of lines that were quoted right at the outset by Aditi, that kind of knowledge does not require dependence on AI. She's quoting from what she's picked up over a period of time. And that perhaps is something we may lose if we have increased dependence on AI. Is that a real risk, and does it change the business model because of it? Because at the end of the day, consumers may make a choice depending on what you're going to be, or at least the projection is going to be of someone who's going through the learning process at the end of an AI-driven module or something that is going to be non-AI driven and more natural, like Aditi is pointing out.
Thanks, Pratik, for having me, and Vikram for having me over here in this call. See, a couple of points which my fellow colleagues has already mentioned. Obviously, AI will not going to replace any teacher, and it's going to be complementing a teacher, right? Whatever may be the subject. The subject may be, formal education, maybe vocational, and any stream of learning. It has to be complemented because, teachers brings empathy, right? So that cannot be, replaced by an AI model. Yes, AI can be, helping us in mass addressing students' query, because on an Edtech segment, since we are, addressing that segment, more student mean more teachers for doubt solving, more operational challenges. So what we can probably look at, the AI layer will actually be used very, very efficiently by Edtech, segment by converting the repetitive task into more efficient, workflow. While teacher remains the core of it, the delivery remains the core of it. But the physical essence should be there, whereas the operational, hazards, or what we call it as a repetitive task, that's where AI comes in. So
are we aiming for efficiency over here? Rahul Agarwal, AI, is it going to end up being a tool to, cut costs, boost margins? Because in that sense, we could be confusing efficiency with real education.
Yeah, so one, I think efficiency, of course, AI will deliver, right? But that's a very limited view. I think the key piece, Jaideep, I think, spoke about the gross enrollment ratio. In India, that is the government claims it is somewhere in the 30s. That means there are more students of college going age, which are outside of college than are in college. What about them? Right? They don't have access to any teacher. Our country is vast. We can't even train as many teachers as we require to get, let's say, our gross enrollment ratio to the government target of 50%. So how are we going to solve this problem? When you start looking at it at the macro level, I think AI is the only solution. And when you start thinking of an education system in which AI is embedded, then you'll come up with a different structure. Nobody's saying AI is going to replace the great teachers. But how many great teachers do we really have? I mean, if you go to every school, every college, do you think all of them have all great teachers? I mean, we've all gone through college and school. We'll have a few great teachers which we remember, but a lot of them weren't great. And so what about that?
Right.
So I think we're doing a disservice to the education system by trying to put these, we're saying like, hey, don't change too much. Give me something which you can give me from artificial intelligence, but don't change it too much. But I think we really need to change the education system to benefit everyone. And that is still not happening.
So this benefiting everyone.
That's the opportunity.
This benefiting everyone, and that's where the opportunity is, according to Rahul Agarwal. Aditi, would you concede that much? That you don't have enough tutors, and AI tutors could help in deeper penetration, because still we are talking about the reach as far as good teachers is concerned is fairly limited. If you have to make education more democratized, then we perhaps need AI for quicker reach. Would you give that?
Yes, I said it's become so easy, to have an easy access to a brilliant library. I mean, AI is booted by human minds only, and they put in the database. But what I'm saying is, see, when we talk of fundamental education, if we are not, we need to understand that we can make a child, a growing child, into a bonsai when he has the capacity of being a majestic tree. That's the one point I was trying to reiterate. I'm not trying to say that I'm against technology, but I'm also saying that the kind of intelligence we had while we were growing up, I really say that the kids are very smart. They are tech savvy. They can do better than teachers for all we know. But should all we need to understand is this dependency can actually, amputate their growth. It can actually not let them grow to the levels that are unimaginable. Like, you see, another thing is nature never hurries, yet all her tasks are accomplished.
Right.
Right?
Fair enough.
And,
so you're saying the speed may not be at the heart of this. Jaideep, speed is at the heart of employability for corporates, etc., who need tasks done in a certain way, in a certain amount of time, need the readiness in employees to be able to get there. And since there is so much of this talk about upskilling at this time, and to have the tools of AI to be able to use it to do a task more efficiently, does that work at cross purposes, and does that kind of change the business model of the edtech sector and what they need to deliver to corporates, to potential employers?
Absolutely right, Vikram. I mean, one of the bigger problems that we need to solve is that of access and affordability. I think everyone is talking about that. And if AI has the opportunity to improve access and affordability, why not? And if it comes to skill development and making sure you have the productivity gains, quality gains, and the time to market gains, it is a great thing. It boosts the employee productivity. It also boosts the overall productivity of the company. One also needs to be mindful of the fact that you need to do it in an ethical manner with respect to intellectual property. So those guardrails should definitely be in place.
Let me ask it, the kind of valuations that are correcting, investor sentiment is cautious when it comes to the edtech sector. About building slower but stronger growth for the sector, can AI actually help companies sustain that level of discipline? Abir, what's your sense on this?
I think it's a pertinent point, Vikram, what you mentioned. In fact, just to give an example, see today AI, everybody said it's used in education core, but when you talk of content development, right, one of the major area we as a company, we are also investing a lot on AI to produce content at scale, which is essentially, trying to, address the cost, because content development in education is one of the biggest costs, right? Whether it's an edtech sector or whether it's an offline player. So there are many layers where, AI is getting involved, which is bringing in, cost efficiency, which is at the end of the day addressing the question which you asked. Right. And I think with all the powerful AI layers and the tools and technology which is available, I think overall in education, we will see a lot of, cost benefit which is coming in. And how do we use it? See, there are multiple tools, but the use cases has to be binded with how we can run a more efficient, company, because cost is something which every company, whether it's an edtech company or any other educational company, is looking at to address it, right? So that's an area where AI will really be efficiently used. And as an educator, we always look at how do we, utilize that technology.
So let me get the business perspective, Rahul. If you had to choose between two businesses, one that is AI driven in the edtech sector and one that is kind of perhaps using technology but is still got pedagogy at its core, which one would you pick? And you need to explain why in a very short amount of time.
So I only invest in startups that use AI and are AI first. I mean, AI is at the core of the business, and I think it's essential for education. So the answer is very clear. It would be the first one. But pedagogy is going to be part of any AI teaching business anyway. Any education learning business will have pedagogy as a part of it. And AI can adapt pedagogy to the student. Rather than having a fixed pedagogy, you can adapt completely the lesson plan, the curriculum, all the pieces in the education piece change. and two, look at it from a cost perspective. Today, if you want to build a profitable education business in India and serve the masses, you need to deliver education at a very, very low price.
Right.
How do you become profitable at that price and still deliver really high education, which is not one person teaching 1 lakh students? But how do you get there? So I think there is, there are different paths to the market, and people need to think very deeply about how you can utilize AI to address a lot of the access affordability issues on one side of the spectrum, but as well as quality and content issues at the higher end of the spectrum.
But ultimately, and perhaps I can take this across to Jaideep, ultimately you think AI is going to make education more inclusive and affordable, or are we going to head towards this two-tier system where perhaps only the tech-savvy would benefit? In the ultimate analysis, what's going to stand? Because here we're talking about a physics wala which has a hybrid system and all of that. What's going to stand?
So before I do that, let me add to what Rahul mentioned. You put him in a very pickle.
Yes.
But you don't have to do a trade-off between pedagogy and technology. In fact, if you see, pedagogy has evolved from theory to including case studies to being practical. This is a new evolution where you include AI and vibe teaching as a part of it. So it's evolutionary in nature, not a trade-off between one and two. But to answer your question, Vikram, affordability and accessibility is the game of EdTech.
Right.
If we don't bring technology to drop the price points at which high quality higher education can be made available to every youth in this country, then we are not solving the problem of employability and the gross enrollment ratio.
Well said. It seems like at the heart of it, education is still about trust and connection. You can't take away that, at least at this stage. I don't know if AI is going to replicate that, and perhaps the evolution of AI is going to answer that question. Should this sector now focus on using AI to enhance, not replace the human touch? And that's going to be an important piece to track, and something that we are doing. It's undeniably changed the rules of the game for India's EdTech players, from how content is created and delivered to how students learn and teachers, how they engage. Today's debate is showing that technology alone is not the magic formula. Profitability is going to depend on how companies, they balance innovation with inclusivity and how they balance efficiency with empathy as well. I want to thank our guests for joining us. Jaideep Kevalramani, Rahul Agarwal, Aditi Jain, Abir Edge. Thank you very much for joining us with your perspectives on this. Such a pleasure to have you and your perspectives on the big question on NDTV Profit. And of course, all the questions are going to continue. But of course, we'll have to wrap it up over here on this particular edition on the big question on NDTV Profit. I'm Vikram Oza from me and the team. Good evening.
Namaste, India. As you all know, I've been traveling around the world with my music. But this one is truly special. Something that's India. From where it all began. The first city of the world, where the Ganga flows. I'm coming to Varanasi to perform at the Namo Ghat. My first raga-based band, Jala, will also perform there. So book your tickets from District app and let's create harmony by the Ganga. See you, Varanasi.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets.
जनता जनार्दन को प्रणाम करता हूं.
Bihar ballot locked and loaded. Who has the edge? Trends, twists and turning points. Get set for the NDTV exit poll. You're watching Battleground Bihar with Rahul Kamal.
Hello and a very warm welcome. You're watching NDTV Battleground. Over the next 2 hours, we will get you the numbers from the Bihar exit polls. We're going to be looking at 3 exit polls today, 2 polls tomorrow, and in a moment from now, I'll explain just why. We have a fabulous lineup of poll pundits in the studio who will be helping us understand the Bihar poll numbers. Let me introduce you to our guests right at the outset. I'll begin with Veer Sanghvi. Is coming back to television after a very long time. Veer, fantastic to have you back. Prabhu Chawla joins us. You've seen him on TV the last few days explaining the numbers, explaining the dynamics of Bihar to our viewers. We have Amitabh Tiwari. He's come back after spending a few days in Bihar. He's joining us now. We have Suprajit and we have Kanchan Gupta. What is striking, and that's where I want to start this broadcast, is just the sheer jump in voting numbers. Phase 2, provisional data. These aren't final numbers. Even at this moment, in some polling centers of Bihar, polling is still going on. But just take a look at the sharp spurt in voting percentages. We'll start from 9 a.m. going all the way up till about 5 p.m. for which we have data at this moment. Just take a look at the 3 lines on your screen. The blue line at the bottom is the 2020 voting percentage. The red line above that is phase 1, which in any case saw a big jump, about a 6.5% total jump between phase 1 and phase 2. And the green line above that is phase 3. So if in the 2020 assembly elections at 5 p.m. 52.4% voters in Bihar had voted, that has now skyrocketed to 67.1%, 15% more than the last elections. In just a moment, I'll start pulling out the post-poll data, but Amitabh Tiwari, a 15% jump till 5 p.m. between 2020 and 2025. Bihar hasn't voted so much since 1915, all elections going back to independence. What's going on in your home state?
Unprecedented and very, very difficult to explain numerically and statistically.
Why is it happening?
Also to incorporate the results of this high turnout in an exit poll or a post poll is going to take some time because people are still queuing up. I think Simanchal is the region wherein yesterday you were showing that the highest number of deletions have taken place. People who are there still on the list and are migrants believe that they are fortunate enough that their names are still on the list and they have not been deleted as permanently shifted. They are going back in hordes so that their names are not deleted in the next round.
Veer Sanghvi, one of the things we picked up on the field was that this sense amongst voters that if we don't go and vote in this election, something's going to happen before the next polling where our names will be stricken